Good evening, dear students. So I am back, C. Ankit Sharma, and with our session of income tax, session number 2, for our basic concept topic. So in last topic of basic concept, we discuss about the origination of income tax. We discuss about the basic things of definitions, persons, charging section of income tax applicability, etc. And we were actually discussing the components of income tax. In that components, we discuss about the Finance Act, the income tax rules, circular, notifications, case laws, etc. After that, we determine how to calculate tax of a person with a stepwise provision. And we were discussing last, technically, the definition of person. In that definition of person, there were 8% included. There are 8 categories. First one was individual. The definition of individual we have discussed, of course, and we were discussing Hindu undivided family provision. I believe you all are studying very hard to achieve your goal, because to become a CA, it's very, very important for your profession, for your life, for your future, of course. So before starting today's class, it's my habit to share some quotes which might encourage some of you. And one of my favorite is this one. This is Abraham Lincoln, you all know, a great leader. And he said, I walk slowly, but I never walk backwards. What does it mean? It means whatever you are doing, just increased, just be on that path. If you're studying for 5 hours, just make it gradually increase. It might be 5, then 6 hours in a day, then 7 hours in a day, and it should be sufficient that it should cover your whole syllabus. In my opinion, before examination, at least before examination, 2 months before the examination, I think you all should complete your syllabus. And we should try to at least revise our subject, each subject, twice before examination. If you can do that, I believe आप सभी लोग definitely exam crack कर सकते हैं. So I believe in this quotation. It's very, very, very inspiring. And I always believe professionally and personally in your life that you should walk at least. You should not stuck somewhere. You should increase your working efficiency, your studying efficiency, your studying hour, your sincerity. How slowly it is, it doesn't matter, but it should be increased, and you should not ever walk back. I hope it might click you what I'm trying to convey you. So in the last class, we were discussed the definition of person, and that was Hindu undivided family. So there are rules for our class. We all know you should focus during the class. Please ask queries related with the topics. We will have today a MCQ test based on basic concepts, what we are discussing. When I will complete the theoretical concept, then I will start a MCQ test. And then we'll move on to the numerical topic of this chapter. Try to take live session, of course. That will really help you in study. You can ask me query in Hindi. I will answer that queries in Hindi, of course. And please be focused. Okay. So I'm sharing this chart. All the notes have been uploaded already. You all know all the notes have been uploaded. So you can download it from BOS app, of course. And this is the chart I have made for females position under joint Hindu family or Hindu undivided family. I have told you earlier that the very special provision regarding for females under joint Hindu family or a Hindu undivided family. What are the special provision for females we are going to discuss. Before that, we already discussed the meaning of joint Hindu family, the Hindu undivided family, the types of Hindu undivided family, like Dayabhaga and Mitakshara. And the difference of Dayabhaga and Mitakshara, we also discussed that. So after that topic, there's a topic which will explain the female's position under joint Hindu family or Hindu undivided family. So here is a very important date. It is a very important date, and that is 6 September 2005. There is an amendment in Hindu Succession Act from this date and onwards. So before this date, before 6 September 2005, all provisions are applicable for females under joint Hindu family or Hindu undivided family. And on and after 6 September 2005, new provision has been applicable for Hindu undivided family and joint Hindu family in respect of females. So what were the old provision? Of course, in examination, the new provision will be asked, not the old one. But I'm explaining you the old one so you can understand the difference, what has been made by this important amendment under Hindu Family Act. So what was the old provision for females? Females till marriage. Till marriage, females remain in the father joint Hindu family or a Hindu undivided family as a member only. Understand? Till marriage. The old provision says till marriage, a female will be considered as a member only as a member in her father Hindu undivided family or joint Hindu family as the case may. And after marriage, what will happen? After marriage, she will end as a member. Her membership will end in his father Hindu undivided family at the time of her marriage. What will happen? Her membership ends after the marriage in her father HUF or JHF. Membership ends and she will become a member in her father-in-law or husband Hindu undivided family or joint Hindu family. So very simple provision till marriage that female will be treated as a member of her father joint Hindu family or Hindu undivided family. And after marriage, she will cease to be a member in her father HUF or JHF and she will become a member in her father-in-law or husband JHF or HUF. Clear? Now, the amendment says that after amendment, what happened? A new concept has been emerged. A new concept has came into the force in the new provision. The new provision says, what will happen now? The provision says, after the amendment, the concept says, now till marriage, she will be a co-partner. Understand? She will be now a co-partner in her father HUF and JHF. A co-partner. Understand? She will be a co-partner, not member. You might be thinking, what is the meaning of a co-partner or a member? We will discuss. After just complete this female position, I'll explain you what is the difference between a co-partner or a member. But the things have been changed. Earlier, she was only the member. Co-partner is more powerful in comparative to member. So now she will be treated as a co-partner in her father HUF and JHF till marriage. And what will happen after marriage? That is very interesting. After marriage, what will happen? After marriage, she will continue to be the co-partner in her father HUF and JHF. She will continue to be the co-partner in her father HUF and JHF plus she will be a member in her father-in-law or husband JHF and HUF. So now the provisions are really interesting and it says what will happen in case of JHF and HUF. The female will continue to be the co-partner after marriage in her father family and she will gain the membership in her husband or father-in-law HUF. So now the new provision says till marriage she will be only co-partner in her father HUF or JHF and after marriage she will have double benefit. She will continue to be the co-partner in her father HUF or JHF as well as she will be treated as member also in her husband HUF or JHF. Correct? So now the new provisions we have to learn for examination. It's very simple. Till marriage, she is only co-partner in her father HUF and after marriage, co-partner in her father HUF plus member in her husband or father-in-law HUF. Now, what is the difference between a co-partner or a member? Let me explain you. So you will understand how important this is. Now, what is the meaning of a co-partner or a member? So for females, the new provision say till marriage, only co-partner in father HUF or JHF. Simple. And now after marriage, she will gain dual benefit. The dual benefit, what? She will continue to be co-partner in her father HUF or JHF and will become member in her husband HUF or JHF. Clear? So technically, male only remains co-partner in their father HUF or JHF, but female will have dual benefit after marriage. Clear? Now the difference between co-partner and member, that is very important. If you are a co-partner in any HUF, that gives you power. A co-partner have two power. One, he or she can demand partition. A co-partner can demand partition. That means he or she can demand partition. If you are a Dayabhaga, in that case, we can demand partition after the death of father. We have already discussed it. And if we are in a Mitakshara, then we can demand partition by birth, of course. So if you are a co-partner in any HUF, then you can demand partition as well as you have the power to receive your share if somebody else demanded. Understand? If somebody else demanded a partition, then you will receive your share and even you have the right to demand the partition. So you can initiate the proceeding of partition. But if you are a member only, then member has only one power, and that is to receive the share. If you are a member in any JHF or HUF, then you cannot demand partition. You have to wait that some co-partner will ask for partition, and when that partition will be asked, in that case you will receive your share. So technically we can say a female can ask partition because she is a co-partner and receive partition from her father HUF or JHF. But when she got married and become a member in her husband HUF or JHF, then she cannot ask. She has to wait that somebody of that family, some co-partner of that family will ask for partition. At that time, she can receive the share. Understand? So there is two power with co-partner. One is to demand partition and receive partition. And if you're a member, you have only one power, and that is to receive partition. Okay? To receive your share. So that was the provision regarding females under HUF. Moving on to our notes. Here the provision. So these were old provision. Theoretically, you can understand from here a HUF or a JHF, both term speaks of the same entity. It consists of all male lineally descended from a common ancestor, their wives and daughter. A daughter is a member of the family till her marriage. There's an old definition, what I just explained via diagram to you. Okay, the daughter will remain member till marriage. After that, they will be member of husband HUF. Okay. Now, with effect from 6 September 2005, now she continued to be co-partner in the HUF of her father, even if she get married and become the member of her husband HUF. So, position before 6 September 05, there should be at least two male members to create HUF. Position with effect from 6 September 2005 now. Even if there be one male member and one female member, it can be a HUF. To create HUF, we just need one co-partner and other can be a co-partner or mitakshara. So in that sense, now two female can also create a HUF, but one of them should be co-partner. For example, in a Hindu family, a daughter and her mother can create HUF because daughter is a co-partner and mother is member. But mother and grandmother cannot create HUF because they both are member. Two sisters can create HUF? Yes. One brother, one sister can create HUF? Yes. One son and his mother can create HUF? Yes. So one should be co-partner, other can be a member, it does not matter. Even two female can create HUF, of course, provided one of them must be a co-partner. Okay. Now moving on. After the amendment of Hindu Succession Act, the daughter, not for spouse means wife. So daughter is now equivalent to co-partner. Of a co-partner shall by birth become a co-partner in her own right in the same manner as the son or daughter. Hence, now the daughter can also ask for partition. Why? Because now they became co-partner. That was the definition of HUF. Now the new definition, the third definition is association of person. It's a very simple definition. It says if there is any organization, if there is any business like this, I can explain you with. For example, there is Mr. A and B and C. They decided to start a business, any business. They start a business of financial consultancy. They decided that we will open an office, and from that office we will provide services, financial services. Now what happened? They start a business, but they do not register it anywhere, not as a partnership firm, because whatever profit they will earn, now this profit have more than one owner. If any income has one owner, then it will be treated as an individual. But because now owner are three, they decided equal share, 1/3, 1/3, 1/3. But they did not register any agreement. They just decided verbally or written on a normal paper or written on a stamp paper, but they did not register it anywhere. So if there is any organization which has not been registered and the owner is of course more than one, it will be called a association of person, AOP. So AOP's definition is very simple. The complicated definition, the huge definition, the important definition was HUF. It has been completed. AOP and other definition is now very, very, very simple. So moving on to the notes. Association of two or more persons who join for a common purpose with a view to an income with or without an agreement. So either you can make an agreement or you are not making an agreement, but it should be a registered agreement. If it is a registered agreement, then it might be a LLP or company or a partnership firm, depend upon where you get that registered. But if it is not registered, it will be called a AOP. In other words, if such person registered under the Partnership Act 1932, then it is called firm. Otherwise, it is called as AOP. For example, co-heirs, codoni, etc. Now, the body of individual. This is also interesting. If you are having any income, if you have earn any income, but you are not the owner of that income, you are just the caretaker of any income, then you will be treated as body of individual. For example, if there is Mr. F and he has 3 children, S1, S2, daughter D1. They all are minor. Mr. F has a property, has a building. And from that building, he earns rent of rupees 2 lakh per month. Now, Mr. F thinks that he will not survive long. He is going to die. So he made a will. Mr. F made a will and appointed A, B, C as a caretaker of his property and that income, and decided that ABC, after his death, ABC will take care of that property and will transfer amount to S1, S2, D1 for their survival. And when they will be major, then the income and the property will be transferred to the S1, S2 and D1. So in that case, ABC will receive 2 lakh rupees. Understand? Legally. But are they the owner of that income? Of course not. They are just the caretaker of that income. So if you are a caretaker of any income, then what will ABC will be called? They will be called body of individuals. So in all 8 categories of person, like individual, HUF, firm, AOP, etc., in all cases, you are the technically owner of that income. But in case of body of individual, you are not the owner, you are just the caretaker of that income. So in this case, whatever income 2 lakh rupees will be received by ABC, for that income will be assessed in their hands as a body of individual. Whatever be the tax liability on 2 lakh rupees, that will be paid out of that 2 lakh rupees. Of course, they are not personally liable for any tax. Now, the question might arise, why ABC will do this? Why? So, of course, they will be pay some salary out of these income. Of course, might be 10,000 per month to each, etc. So, whatever they will receive as a salary, etc., individually, 10,000 A, 10,000 B, and 10,000 C, that is going to be taxable in their hand as an individual, because in that case, they are owner of that particular income of rupees 10,000. For that 2 lakh rupees, they are not the owner. So that will be treated as body of individual income. But if that out of that 2 lakh rupees, they receive some amount of salary, etc., that salary, etc., will be taxable in their hand as an, of course, individual income. Understood? Fine. We have a lot to cover today. So I am focusing to cover the each and every topic. Okay, good evening messages are already have been come. A lot of, I will say good evening, just wait. An association of individuals who carry on some activity with the object of earning some income. There must be a registered agreement for such purpose. For example, executors, liquidators, etc. Okay. Now, partnership from meaning is very simple. Before this partnership meaning, let's have good morning to everyone. Good evening, sorry, what good morning. Good evening, everyone. Milton Kumar Mahara. Okay, Yogita, good evening, good evening, good evening. Okay, good evening, sir, good evening. Today we will discuss also how to create interest in your study. We have an MCQ test also over there. Of course, you can send your queries to me and I'll take after 30 or 40 minutes. We will have our break around 7:15, etc. So these are the guidelines you already knew, of course. Good evening, Arshita. Good evening, Madhuri. Good evening, everyone. Okay. Good evening. Okay. So moving on to the partnership firm provision as defined under Section 4 of Indian Partnership Act 1932. Indian Partnership Act 1932, and LLP means as per LLP Act. So there is no separate definition under income tax regarding this. So the definition is very simple and it says partnership firm means the partnership firm as defined in Partnership Act, and LLP means as defined in LLP Act. Okay. Trying to focus on the queries in Excel format. Just checking the query session. Okay, so the term firm, partner, and partnership have the same meaning as assigned to them in the Indian Partnership Act. Of course, you already have studied that act in your foundation. In addition, the definition also includes the terms LLP as per LLP Act 2008. Fine. We all know the definition of partner, the meaning of partnership firm, etc. Now, the definition of company. Now, as per Income Tax Act, what is the meaning of a company? It's very important. It's a very important definition. It says company is defined as under an Indian company. So, if you are an Indian company, you will be treated as a company under Income Tax Act for the purpose of course, tax liability rates, etc. Now, any body corporate incorporated under the law of foreign country will also be treated as a company. Now, this is new. Understand what it says. The first point says an Indian company will be a company. Any body corporate incorporated under the law of foreign country will also be treated as a company. That means if you are a foreign company then you will be also treated as a company. But there's an interesting. The definition say any body corporate. That means this term is very important. Any body corporate incorporated under the law of foreign country. Very important definition. It says, imagine there is a partnership firm. There is a partnership firm and it has been registered under USA Partnership Act. There's a partnership firm which has been registered under USA. So of course it has been registered under USA Partnership Act. Or imagine there is a trust which has been registered under USA. So now if there is a partnership firm which has been registered under USA and it is start business into India. So it's a partnership firm as per USA. But let me tell you, under Indian Income Tax Act, that partnership firm will be treated as a company. Why? Because partnership firm in India will be treated only as a partnership firm if they are registered under Partnership Act 1932. But this partnership firm has not been registered in India. It has been registered outside India under their Partnership Act. And what point number to explain? It says any body corporate incorporated under the law of foreign country. So if there is any organization, in a simple word I can tell you, if there is any organization which has been registered outside India under that law of that country, then it will be treated as a company under Income Tax Act. Understand? So if there is a partnership act firm, if there is an LLP which is registered outside India, so for income tax purpose in India, they will not be treated as a partnership or LLP. They will be treated as company. I hope it's clear. It's very simple. Next, any institution which has been declared, as CBDT to be a company. So CBDT is Central Board of Direct Tax, and it is our highest authority of income tax. So if CBDT decided to treat any organization as an company, then that will be treated as a company. For example, there is a partnership firm in India, but CBDT decided that we will treat that partnership firm as a company. Then only for the purpose of income tax rate purpose, that partnership firm will be treated as a company. It doesn't mean that partnership firm will have now directors. It doesn't mean that they have to make MOA, AOA. It does not mean they should use private limited word. No. Only for income tax purpose, the rate of tax which is applicable for companies, that is only going to be applicable for that partnership firm. The seventh point is local authority. Local authority means government bodies which work on local level for the benefit of society, like panchayat, municipality, port trust, etc. AJP definition is very crystal clear. It's very simple. Those are not included in the above 7 category will fall under this category. And this category refer to those entities which are not natural person but are separate entities in the eyes of law, including God. You might be thinking that God is a supreme power in our country, but let me tell you, income tax is above God, because even God needs to pay tax on his income. How it happened? Let me tell you. If there is a temple, mosque, church, gurdwara, whatever it is, and we are just going there and donate some amount of money, etc. So whose income it is? Of this priest, pujari, or the God? Of course, the God. We are going to Shiva temple, Hanuman temple, mosque, and Jesus, etc. church. So we are technically donate to the God. But of course, God will not come to on earth and will pay tax. So on the basis of God, that trust need to pay tax. So technically it is the income of God, and technically because he is not coming to pay tax, but still he needs to pay tax on that income as a artificial judicial person. So those will not fall in the category of above 7 category, will fall under AJP. For example, universities, college, ICAI, ICSI, God, etc. Okay. So we just complete the definition of AJP. Moving on further, the definition of assessment year, I have already explained to you in that charging section provision, the meaning of assessment year and previous year. So not going to further explain it. Here's a definition. A period of 12 months commencing on 1st April and ending on 31st March of next year, in which income tax department will verify the income and tax submitted by you. So assessment year is the year in which you need to pay the tax year, which is the financial year preceding to the assessment year. For the purpose of a new business, previous year will start from the day business start and ending on 31st March. It means for a new business, first previous year can be less than 12 months, correct? Previous year can be different for different source of income. If I'm starting my business from 1st of July, then the previous year for that business will be from 1st July till 31st of March. And I also start doing job from 1st of September. Then for that salary income, for that job income, my previous year will be from 1st September till 31st March. But assessment year will be same for all incomes. If a business start from 6/10/2022, then previous year for such business includes the income from 6/10/22 till 31st March 23, which is 5 months and 26 days. The definition of assessee. Moving on to the definition of assessee. Assessee means who needs to comply all provision and procedure under Income Tax Act. So assessee is that person who needs to comply all the provisions and procedure under Income Tax Act. Assessee means a person by whom any tax or any other sum of money is payable under this act. In addition, it includes. So the person is that category which tell us that who is responsible to pay tax in our country. If you fall in the category of person, then that means income tax will be chargeable upon you. Assessee says, if you fall in 1, 2 or 3 point, any of these points, of course, if you are assessee, you are already a person. All person may or might not be an assessee, but all assessee will always be falling in the definition of person. So if you fall in the definition of assessee, that means if you fulfill either condition number 1, condition number 2 or condition number 3, you will be treated as an assessee. And once you become an assessee, that means you have to comply with the income tax provision. And let me tell you, as you cannot escape the definition of person, in the same way, you cannot escape the definition of assessee. If department wants to include you in this definition, then you cannot escape from this definition. First point is very simple. It says every person in respect of whom any proceeding under this act has been taken for the assessment of. So you are an assessee if you are liable to pay tax. Okay, if you are liable to pay tax, you will be called an assessee, by whom any tax or any other sum of money is liable to pay. So if you need to pay any tax or any kind of penalty or any kind of amount to income tax department, then you are an assessee. Fine. This is a silent first condition. The first condition is this, and that is silent. Any tax or any other sum of money. This is technically one, but practically concerned, this is condition number 2. It say every person in respect of whom any proceeding under this act has been taken for the assessment. Now imagine your income is like 3 lakh rupees. Okay, so you are not liable to pay any tax. In our country, technically or practically up to 5 lakh rupees, you not need to pay any tax. So for example, suppose your income is 3 lakh rupees. So you are not liable to pay any tax. But department open your case. Department says, just come and prove that your income is actually 3 lakh rupees. You have not escaped your income. So if the proceeding has been started, the case has been started against you, again you will be called an assessee. So every person in respect of whom any proceeding under this act has been taken for assessment, for verification of his income or income of any other person in respect of which he is assessable, or the loss, either they want to check the loss claimed by you is correct or not. the loss sustained by him or by such other person, or the amount of refund due to him. Or if you claim some refund and they want to check, department want to check anything, your income, your loss, your refund, etc., then automatically you will be an assessee. Third is technically second, but practically it's third. Every person who is deemed to be an assessee under any provision of this act. So somebody asked me in the last session, do minors need to pay tax? And I say yes. For example, there is Master A and his age is 15 years. He's a TV star, he's a TV actor, and imagine he earned 20 lakh rupees in a year. So he's a minor income tax. We do not care. If you have income, you need to pay tax in India. So he will be treated as an individual, technically legal owner of that income. So he need to pay tax in India. So he will be an assessee in that silent point. The silent point of assessee definition, which says that if you liable to pay tax, so he's liable to pay tax, so he's an assessee automatically. But in our country, minors cannot pay tax themselves. They are liable to pay tax, but practically they cannot file their return. So they need to pay tax via their parents. So now imagine his father, Mr. B. Now he is liable to pay tax on this income on behalf of his son, of course. So he will be called now deemed assessee. Deemed means assumed. So technically Mr. B is not the assessee because he is not liable to pay tax because the income belongs to Master A. But as our country say that minor cannot pay their tax themselves, so his parents need to pay tax by filing his return of income, etc., and in the category of deemed assessee. So in the same way, I told you that artificial judicial person, if the God is there, the income of God, and the God is not going to pay tax. So on the behalf of God, the trust need to pay tax. So technically trust also is deemed assessee. In the same way, body of individuals, all cases of body of individual will also be treated as deemed assessee. Okay. So if you are not the direct assessee, if you are the indirect assessee, then also you will be a assessee. And the last point, every person who is deemed to be an assessee in default, assessee in default also treated as assessee under Income Tax Act. What is the meaning of assessee in default? Like for point number 1, I have told you that if your case has been opened by the department, like for your income is 3 lakh rupees, department send you a notice that we need to check that your income is 3 lakh or not. And you did not respond to that notice. You did not went to the department. Department called you, but you did not respond to that notice. So in that case, you will be called a assessee in default, and you will also be treated as an assessee, of course. So if department want to include in the definition, they will open your case. If the case opening you accept, you will be fall in the category 1. If you do not comply, if you do not respond, you will fall in category number 3. Now, definition of Indian company, very straightforward definition, very simple definition. Nothing is technical. Means a company formed and registered under the Companies Act 2013. We all know that. And includes a company formed and registered under the law relating to company formally enforced in any part of India. So Companies Act 2013, if you have registered as an Indian company, in this act, you will be an Indian company. But if there is any other Companies Act before this act, and you have registered in that Company Act, again, you will be treated as an Indian company. For example, before this Companies Act, there was a Companies Act 1956. So if your company is registered in 1956, that will also be treated as an Indian company. The first Indian company was East India Company, which has been registered very long before. In the same way as our Income Tax Act, we are studying 1961. But that is not the Income Tax Act which has been imposed in India initially. Before 1961, there was Income Tax Act 1922, and before that there was Income Tax Act 1918. And I guess the first income tax was introduced in India in 1860. So that income tax was updated in 1918, then 1922, and the recent is 1961, what we are studying. In the same way, if your company has been registered in old Companies Act, any old company act, then also it will be called an Indian company. Okay. A corporation established under the Central State Act, that also be treated as an Indian company for the purpose of tax, like LIC, etc. Any institution, association declared by CBDT, CBDT can do anything. It can declare anything as a company or an Indian company. A company formed and registered under any law formally enforced in the state of Jammu and Kashmir. Okay. Company formed and registered any law enforced in the union territories of Daman and Diu, Dadar, Nagar and Haveli, Pondicherry, etc. So if your company is registered fall in any of the above category, you will be called an Indian company. Note says, but the registered office should be situated in India. Now, definition of domestic company. What is the meaning of domestic company and what is the meaning of a foreign company? Here we go. Okay. So what is the meaning of domestic and foreign company? It's very simple. Like all Indian companies, automatically treated as domestic company. This is a universal rule. All Indian companies are domestic company. And if there is a foreign company, it can also be treated. If there is a foreign company, it can also be treated as an Indian company if it fulfills two conditions. It pay tax in India and made prescribed arrangements. That means follows SEBI guidelines. Follows SEBI guidelines for dividend distribution, etc. So if any foreign company fulfill these two conditions, then that foreign company also be treated as domestic company. Both conditions need to be fulfilled. So what will be a foreign company technically, which is not a domestic company? That means if a foreign company does not fulfill both conditions, then it will be called a proper pure foreign company. But if a foreign company fulfill both conditions, it will be treated as a domestic company. What is the benefit of being domestic company? Let me tell you very simple. If you're a domestic company, the tax rate will be around 25% to 30%. Fine, we will read the detail in the rate of taxes topic. But if you're a foreign company, the tax rate will be 40% till 50%. So being a foreign company in India, would you like to fulfill these two conditions or not? Yes, if I fulfill these two conditions, then need to pay income tax with a lower rate. Okay. Okay. I have seen you send a lot of queries. Going to discuss it. Let's complete this topic. Definition means an Indian company. It will always be an, of course, domestic company. Any other company which is liable to income tax and made the prescribed arrangement. Prescribed arrangement means SEBI guideline. What is a foreign company? That is not a domestic company, will be treated as a foreign company. Assessment definition. This is the procedure by which the income of an assessee is determined. It may be by way of normal assessment or by way of reassessment of an income previously assessed. Assessment procedure will be dealt at the final level. The most important word is this, at final level. So you are safe at this level. You need not to understand the detailed provision of assessment is that level. Fine. Now definition part has been completed. We have left with some more interesting theoretical provision. And then after those interesting theoretical provision, we'll move to the numerical part of rate of tax, etc. Before moving on that, let's see your queries. What you are asked. Good evening, good evening, good evening. Okay. Okay. Miss Ria Doshi is saying co-partner can demand partition whereas member cannot, but both get their share. Very correct, very nice. Yes, co-partner can demand anytime, but if you are a member, you have to wait. But yes, both will get their shares when the right time will come. Whether dormant company has to pay tax or not, if there is any income Everybody needs to pay tax. Okay, it's very simple. Sir, if one co-partner demand partition, will all the remaining co-partner and members get it shared through, though she is not willing? No. If the one is demanding for partition, then he or she can receive his share, the other can remain without partition in that property. It depends. It's voluntarily, not compulsory. Is tax is charged on property inherited? Ms. Tejas, yes, tax is on every property. But in case of property, you have to understand the provision of capital gain. Then you will come to understand the detail how inherited property is going to be taxed. Okay. Dhanupriya Gavels, how they become co-partner? Who? Ms. Dhanupriya, your question is not clear. Please ask in detail. How they become co-partner? Those technically have birth in the family will become the co-partner. I've explained it in the last session also. You can see the last class, might your problem will be clear. Okay. This Tejas, is tax charged on property share received on inherited? It depends upon what you received. If you received property on partition, at that time it's not going to be taxable. But when you will sell that property, in that case, at that time, capital gain will arise and you need to pay tax. Fine? At the time of partition, you not need to pay tax. What is the status of adopted child in HUF? Adopted child will be a member in HUF, of course. Every comment is visible, of course. Okay, any more? So I have answered all the queries yet. You missed Tejas. Tejas, let me tell you, do not ask same question again and again. Okay. I have told earlier also in this class and our last session also that you can send your queries and wait for 30 or 40 minutes. When I will start taking the queries, I will of course going to take your queries also. So just be patient. Just be patient. I am here. I will answer each query. I'm not going anywhere without solving your queries. Okay. Let's see any more queries. Okay. So now the concept. I'll take the MCQ. Just need to finish this topic. After that, we'll be able to take your MCQ test. This, I guess, we will able to take your MCQ test at the end of today's session. Till that, we need to complete this whole provisions. We have left with some interesting provisions. So now we are coming on to the special provision of black money. Fine. Previous year for unexplained cash credit investment. General provision is very simple. If you have earned your income and that year is called your previous year and earning year also, because you need to or you're going to pay tax on that income in the next year, and that is previous year. Now imagine if somebody earn Mr. Raman earn in previous year 21-22. Mr. Raman earn 20 lakh rupees income in this previous year. Okay. And he disclosed to income tax department only 15 lakh rupees income in assessment year. And he paid tax on this 15 lakh rupees income. And this 5 lakh, he did not. जी नहीं मैंने आपको आवाज नहीं दी. So on this 5 lakh rupees income, he did not pay any tax. So he escaped this income. Now this income is called black money. So you might have heard the word black money and white money. What is the difference between a black money and white money? It's all same currency. It's the notes in the form of green or yellow or pink. Of course, pink is most important, 2000 rupees notes. So technically on which income we pay tax, it becomes our white money. And if we do not pay tax on any income, that becomes our black money. Now what happened? This income has been earned in previous year 21-22. So the earning year of this 15 lakh, earning year of this 15 lakh will be previous year 21-22 earning year. And previous year also same, because you disclosed to the department in assessment year 22-23 the last year, so I am going to pay tax. So department will say yes, okay, 22, and my earning previous year also 21-20. So in case of white money, earning year and previous year will always be same, always universal rule in case of white money. But because you did not pay tax, so what happened? Somebody informed the department that you have earned 5 lakh rupees. Came to know this in the year 25-26, almost after 4 years. Department came to know this thing, and department technically caught you and gathered the evidence that yes, you have earned 5 lakh rupees, which department come to know in year 25-26. So now the previous year for this 5 lakh will be 25-26 because department came to know only in this year. But the earning year of this 5 lakh will remain 21-22. So earning year never changed. Whatever changes previous year. So in case of white money, your earning in previous year will be same. But in case of black money, your earning year will remain the same. But the previous year will be treated that year. In which year? Department caught your income. Departments find your income. Departments came to know about your income. So in case of black money, it will always earning year and previous year will be different. And in case of white money, they both will be same. So now our topic is this, to find out black money cases. Which income is called black money? How department will say that this income is white and this income is black. So in which circumstances your income can be treated as a black money. I have already made the diagram also for this topic. So it will be really easy for you to understand by a diagram also after that. So let me explain these provision little fast. Then we will go on to the diagram and it will be really easy for you. So previous year for unexplained cash, credit, investment, etc. So whatever is unexplained, it's a single answer. What will be the previous year? In the year department will come to know that is your previous year. Simple. Cases where earning year and previous year is different. White money, previous year equivalent to earning year. In case of black money, previous year, earning year different. First case is cash credit under section 68. Where any sum is found credited in the books of an assessee maintained for any previous year, an assessee has no explanation about the nature and source. For example, if you have entered in your books of accounts, amount of rupees 20 lakh has been credited. Department comes to you and asks, for example, your books of accounts of year 21-22. But department came for search in year 25-26. And it sees in the year 21-22 books of account, there's an entry of rupees 20 lakh of credited entry, that the amount has been received, and department asks you, this 20 lakhs belongs to which income? And you are not able to explain, and you are not able to prove that you have paid tax on it. In that case, if you are not able to explain any entry which is recorded in your books of accounts or your bank account or in any documents, any entry of any amount has been in your any document, understand, they do not find any money, they just found the entry and you do not have any explanation, then that income will be treated as your black money. So if department find that entry in 25-26, but the documents relevant is year is 21-22, then of course earning year will be 21-22 and previous year will be 25-26, and that income will be treated as black money. So if you have no explanation about the nature and source thereof or the explanation offered by him is not in the opinion of the AO is satisfactory. AO is assessing officer. So we call the income tax officer also like assessing officer is satisfactory, then such sum may be charged to income tax as the income of the assessee of that previous year. You can read the example also, it's very simple. Unexplained investment, same case. If department find out that you have invested some amount, but in the books of accounts you did not show that, so that unexplained investment will also be treated as your black money. For example, in previous year 21-22, in your balance sheet which has been prepared by you, investment is 0. But when department search at your house or business, they find that you have land in your name of rupees 20 lakh, building in your name of rupees 40 lakh, shares etc. in your name 50 lakh, and they all purchase date is previous year 21-22. But department find these details in year 24-25. So when department will check your balance sheet of 21-22, that has investment value is 0. But practically you have invested rupees 110 lakh, 1 crore 10 lakh rupees in that previous year. That means it might be belong to your black money. The department will ask you if you have invested that amount, why it's not shown in your balance sheet, and you do not have any explanation, then that 110 lakh will be treated as your black money. Earning year will be 21-22, but previous year will be 24-25. Same concept in case of unexplained money. In point number 1, we found the entry, but not the money. But in point number 3, now we got the money, but no entry in books of accounts. Department searched to the assessee and found 10 crore rupees in his house, rupees, jewelry, bullion, etc. Bullion means unformulated precious metal. And he did not show the proof in the books of accounts. He found the owner of money, bullion or jewelry, but they are not recorded in the books of account and no explanation. Again, that value will be treated as your black money. Assessees found the owner of any money, bullion, jewelry or other valuable article and such are not recorded in the books of account and no explanation. Same concept. Last 3-4 lines are same in every point. Amount of investment not fully disclosed. In point number 2, we just see that investment value is 0 and actual investment was 110 lakh. Point number 4 says, if you have land and you have shown the value in your books is 20 lakh, but the real value, the registry value is 50 lakh. So if you underrated your value of investment, if you undervalued the investment value, in that case, the difference will be treated as a black money. Same concept, same language. With example, if the assessee found to be the owner of say 300 grams of gold, market value is 25,000 during the financial year 31st March 22, but has recorded to have spent 15,000 in acquiring it, then assessing officer can add 10,000 as his black money. Clear? Point 5 says unexplained expenditure. If you have done some expenditure which does not match with your income, you have filed income tax return. You have filed income tax return to the income tax department like this. In year 1, you file to income tax department that your income is 10 lakh. Or we can say from 5 years, you have filed your income tax detail 10 lakh rupees each. So with department, it has been disclosed that you have earned 50 lakh rupees income in last 5 years. From first year you started and from after 5 years, now your value of return has been submitted to department is 50 lakh rupees. Clear? Now, out of this 50 lakh, department assumed that almost 60 8% must be your personal expenditure, etc. So technically, your investment will be 20 lakh rupees. This is also be reported to department. What is your investment? So you have reported to the department that you have 20 lakh rupees as an investment, which is out of which some is cash in hand, some amount in bank, and some are like investment in property, shares, etc. So we have informed the department that we till now we have earned 50 lakh rupees, out of which 30 lakhs has been expended in personal expenditure. We have remained with 20 lakh rupees as a cash in hand, cash at bank, or investment. Fine. So if in this case, say Mr. Ram wants to purchase a car, so technically he has left with 20 lakh rupees of savings. So maximum investment in a car he can do up to rupees 20 lakh. But assume he purchased a car of 35 lakh rupees without any loan. He purchased in cash. He paid via his bank to the dealer. So now department has a knowledge of your savings, and that is 20 lakh. But you just did an expenditure values 35 lakh rupees. So it does not match with your income. There's a gap of 15 lakh rupees. How it came? So now department will serve you a notice. Now tell me how you invested 15 lakh rupees extra, which is more than your income or investment, what you have submitted to us. So either you have took a loan. So you can explain, I have taken a loan of 15 lakh rupees. So whenever you buy a car, it's practically what I'm telling you, the dealer inform to the income tax department. Dealer will ask your PAN card, your details, and it will submit that PAN card, Aadhaar card. They will serve a notice. You have to explain how this 15 lakh has came. And if you are not able to explain it, that means you need to pay tax on this income as a black money. Okay, that is a provision. So whatever expenditure you are doing, you should understand that should be matched with your income. Amount borrowed or repaid on hundi in a section 69. Hundi is a, you can say, local negotiable instrument. So what has happened on hundi in a normal local market? There are persons who have a recognition, have higher net worth. They took or give loan on the basis of this paper, which is called hundi. Like there's a market, and in that market, I am a person having net worth and a recognition. So if somebody wants loan, he will come to me and ask, I need 50,000 rupees. So I can write on a paper that 50,000 rupees should be given to that person. And that hundi is kind of a check. You can understand, I am like a bank of that area. So that 50,000 rupees value he can receive from anyone. Or he can buy the amount of 50,000 rupees goods purchased from anyone. And after a certain time, he will come back to me and he will repay the amount. So this whole transaction work on cash basis, practically. So government does not know who is taking loan, who is giving loan, and if somebody is giving loan like this, so it might be out of the black money because the transaction has no record. So department wants to know that on hundi, who is paying or borrowing the loan amount in cash and where that cash came from. And practically I'm telling you, if the transaction is going in a cash, that means that out of the black money. The department stopped that hundi concept by making that provision, and it says you can use hundi. It's an approved negotiable instrument, but the transaction should not be in cash. The borrowing and repaying both should be only via account pay check. So if somebody is going to do any transaction on hundi now in cash and department comes to know, then that amount of borrowing or repaying will be treated as black money. Directly it will be treated as black money to the person who is borrowing or repaying. It's the same person. Borrowing and repaying is the same person. So if A is giving loan to B, then we are talking about B. So if B is taking loan in cash from A on the basis of hundi, then B, whatever amount takes, will be treated as B's black money. If B take that amount in account pay check, 50,000 rupees, but repay 60,000 in cash, in also that case, that 60,000 will be treated as black money, and we needs to pay tax as a black money with interest and penalties. So where any amount borrowed on hundi or any amount due thereon has been repaid, so both transaction has been covered, borrowed and repaid both. But if on borrowing 50,000 in cash and repaying 60,000 also in cash, so in that case, 50,000 will be treated as income at the time of borrowing. Then at the time of repaying, that 50,000 will not be taxed again. Only the remaining 10,000 will be treated as black money income. It has also been written other than an account pay check. So if you are doing it other than account pay check, other than RTGS, NEFT, of course, that means in a cash, etc. On a bank, the amount so borrowed or repaid will be treated as the deemed income of the person borrowing or repaying. So the same Mr. B has been caught. So if B now take the loan in cash on hundi, so he will be caught. Such amount in the previous year of borrowing or repaying, as the case may be. But if any amount has been deemed as his income on borrowing, then it will not again treated as income at the time of repayment. The amount repaid shall include the amount of interest. So if your income fall in any of the above categories, above 6 categories, then you have to pay tax at the rate of 70%, 78%. So unexplained credit, money, investment, expenditure, etc. Section 68, 69, A, B, C, D. The tax rate will be flat 60% plus 25% surcharge. Surcharge is, that is tax on tax. What is the exact meaning of surcharge and cess? We will discuss in rates of tax topic, what we will discuss after the break. So the basic rate is 60% and surcharge is 25% of 60%. So that will be 15%. 25% of 60% will come 15%. So it will 60 plus 15, that is 75%. And now on that 75%, 4% cess, that will come 3%. So total effective rate is 78%. Let me tell you how. It's very simple maths. Nothing is complicated. And in case of black money, tax rate is 60%. Now 25% of tax. So 25% of 16% comes 15%. That will be surcharge. So total is 75%. Now it's a 4% of this. So 4% of 75% will be 3%. So now effective tax rate is 78% in case of black money. This is only tax. You have to pay interest, you have to pay penalty also. That is different, fine. That was the provision regarding black money we just discussed. I have also made the chart also. You can refer it. It will be really easy for you. Point number 2 say no deduction, no exemption, no expenses can be deducted from black money. If department finds black money from you 10 lakh rupees and you say I have paid commission for that black money 1 lakh rupees, so please deduct it also. So there is no deduction allowed. Whatever amount treated as black money will be fully taxable at the rate of 78%. No exemption, no expenditure allowed. Such income will be liable to tax and tax will be recovered as prescribed. Black money income does not have any assessment here. The recovery procedure will be case to case basis different. So white money have assessment year, black money income does not have any assessment year, they only have previous year. Now the second interesting case is in which income of previous year is assessed in the same year, or exception of the rule that income of previous year always taxed in assessment year. So what was the rule regarding the white money? In case of white money, what can happen? Your previous year income will be going to tax in next year, and that is assessment year. We are talking about the white money. But there are some exception in white money also. There are some cases in white money when the previous year income is going to tax in the previous year also. We can say in some cases the previous year is also the assessment year in case of white money. So you might be thinking why it's like this. So there is a genuine reason behind it. because, my dear students, we have to cover a lot of provision today. So I am technically skipping the basic things what we generally discuss about other things except the study, like how to focus on your study, how to create interest. But definitely I'll tell you, I just need to cover the certain parts, so I'll be relaxed that yes, we will complete the whole topic today in today's session. So definitely I am going to tell you other things also. But just remember one thing, fine. Enjoy your study. Do not take burden, extra burden of your study. Do not panic. What will happen in exam? Exam will come and go. You will be a CA later or sooner. It should be sooner, of course. But if you will take the burden of your study, now it will be really difficult for you to study again. So enjoy this journey because this time will not come again in your life. Your goal is to becoming a CA. Okay. And this is your journey. This will not come again. Enjoy this. I'm telling you, the day you will become a CA, you will feel I should enjoy the journey also. Always taking tension, always taking burden, always the expectation burden on your head. That will technically affect your performance in a bad manner. So just be relaxed, trust yourself, be confident, believe in yourself. Make a plan that I will complete this course, I will complete this chapter like this, I will complete my syllabus like this, I will going to give my examination, and I will be a CA. So I have planned my study like this also. I should tell you that I have planned my study like this, that before examination, at least 2 or 3 months before the examination, I have completed all my topics, all my subjects. I have revised my subjects twice or thrice before examination. So there was no tension in examination. Generally, I find students taking a lot of tension. What will happen? This has been left. I will complete my course. There is a lack of planning. So planning is important for each and everything. It's a very basic thing of your life. Even if you are going to a marriage, you plan what we should wear and what time we should leave. Even if you plan for your party, you plan where you going to throw a party, how you will arrange the money, etc. So these are simple. In a everyday, we plan for things, for small things, but this is a huge thing. So you make a bigger plan for it, and we do not plan. We just study. Let's study this, again this. So that will create a problem later. So make a proper plan. Enjoy your study. You cannot study for the whole year. Technically, you cannot study for the whole month also. Just make a plan that for 5 days in a week, study properly without any break, without any party, etc. You should sacrifice a lot of things to becoming a CA. So decided for these 5 days, I will study properly. I will not take a leave. I will not go for any party, etc. Then 6 day like Saturday, you can relax. You can study as well as relax yourself, and for Sunday you can also enjoy, because it's not possible. It's a very long process. It's a foundation, then your intermediate, then your final, then articleship, etc. So it's not possible that you can study for 7 days for next 3 years. So it's also important that you should enjoy your life also. So just try to make a plan. In that plan, you should understand how much hour I have to give to my studies and how much hour I have to for myself also. So in a week, you want to study, go for it. For 5 or 6 days, just do hard work. Fine? Serious study, sincere study. And one day you should enjoy your life. You should watch movie or whatever you want to do, because that will create your interest in your study. You will not feel bored. You have to do that. I have done that. On a one day on Sunday, I only watch TV at my time. TV, movies, going out, etc. But for next 6 days, I'll be really sincere. I can tell this. I sacrifice all the marriages, all the functions, all the parties. I never throw a birthday party if it is on weekdays. And I never went to a birthday party if it is on weekdays also. So that's a basic criteria, but the basic is study hard and enjoy also. This journey is really beautiful. Very, very beautiful. Fine. So moving on to I was discussing about why it's tax need to be paid in the previous year. For example, it's a very simple provision and government technically make this provision because they do not have any choice. It's like this. Mr. Rajesh, working in India, of course, his salary income in India, and he earned 20 lakh rupees per month. Now what happened? From 1st September 2021, he is leaving India. Now he got a job in USA and he's permanently leaving India. So from April till August, April, May, June, July, August, that means 5 months salary income, almost 100 lakh rupees. So when he left India from 1st September 2021, Income Tax Department asked, please pay tax on this income. So what he said, this is my white money, this is my previous year. So as per your provision charging section, I'll come to the next year, and that is assessment year, and I will pay tax in the next year on this income. Now what will happen? Will he come back? We don't know. He might come back, he might not come back. And if he did not come back, then it is really almost impossible to collect the tax from that person. But we can't help it because your charging section would say, yes, the tax of the previous year need to be collected in the assessment year. And because it is not a black money case, because he declared that, yes, I have earned 100 lakh rupees income, I will pay tax in next year. But that is an uncertainty. So department made this provision that in a case where a person is leaving India permanently, is going outside India, then the tax will be on the previous year income need to be collected in the same year. So the previous year assessment year will be same in this case. So he will not be allowed to leave India until otherwise he will pay the tax of that income in the previous year only. So we can say this provision has not a harsh provision on the assessee, but it's a genuine provision. Because in that case, if department not able to collect tax in this year, then might be not able to collect tax in the further year also. So we can say in Hindi, the section should be like this: abhi nahi to kabhi nahi. Tax abhi nahi to kabhi nahi. Fine. So moving on to the provisions. In which scenario it will happen? So there is a case, first case is non-resident shipping business under section 172. So if there is a non-resident, what is the meaning of resident and non-resident? That we will discuss in the chapter number 2, that is residential status. So if is a non-resident who is doing a shipping business and comes to India and earn freight, then if he earn freight of rupees 50 lakh from Indian port, so now he's going back. Department will say, please pay tax. So what he will say? The same thing. I will come next year and I'll pay the tax. But he may or might not come back. So in that case, department made this provision that if there's a non-resident who's doing shipping business and earned income in India, then before leaving India, he need to pay tax on that income. How will calculate the income, the profit? Because whatever 50 lakh he collected, it's kind of a revenue. It's kind of a sale. And we need to charge tax on the profit. And profit will come to know when he will deduct the expenditure, when he will make the P&L account. So he need to go back for that purpose, but we cannot allow him to go back. So department has made a very simple straight percentage. It's a fixed percentage. 7.5%. Department says if you are a non-resident shipping business, then 7.5% of your freight, we will treat it as your profit. And you need to pay tax on that income or made the prescribed arrangement to pay tax on that income in the same year. Second point, I have just told you, that was the example when it appears to the assessing officer that any individual may leave India during the previous year and has no such intention to came back. How you will come to know the intention of came back? Visa. In visa, if it is written that he is going permanently, in that case, we will take the tax in the same year before he will leave India. Here is the example. You can read it. It's very simple. Assessment of AOP, BOI, AJP. Association of person, body of individual, artificial, judicial person. Formed for a particular event. If they are formed for a particular event, then section 174A applicable. For example, if some musician, some artist outside India comes to India and perform in India and earn 2 crore rupees as his performance fees. Now he is going back. So department asked for tax. He said, I will come in next year and pay tax. And again, I do not fall in point number 2 because point number 2 was the person who reside in India but now living in India. So he's a foreigner. So he said this condition is not applicable upon me. So he will go outside India and might not come back. So department do what? Department also include this case in this scenario. That if any AOP, BOI or AJP formed for a particular event and it is going to dissolve in the same year, then before dissolution, the tax need to be paid in the same year. This provision is applicable for Indian as well as foreigner also. This is not only for foreigner, this is applicable for everyone. Like if we are organizing an event, any music concert, fine, and we formed a AOP or BOI AJP, and it will be dissolved in the same year after the concert. In that case, we need to pay tax before dissolution in the same previous year, because the next year after dissolution, it will be very difficult to find out the person who arranged that performance and collect tax. Assessment of person trying to transfer his asset with a view to avoid tax. If there is any person in India, point number 2 says if any person leaving India who reside in India, then caught him. Point number 3 says that if any AOP, BOI, AJP for a particular event, then again we need to pay tax in the same year. The fourth point is a very simple. It says suppose it's about me. I have in India, I'm not going anywhere. Fine, I'm in India. And now what I'm trying to do, I am selling all my properties, my land, my building, my car, my jewelry. I am closing my all bank accounts. Why? Because on sale of property, we technically have capital gain and we have to pay tax on it. But now I want to avoid that tax. So what I am doing, I am selling all my property and I know if I'll reside here, department will come and again ask for tax in next year. So I'm not going outside India. What I'm doing, I'm selling all my properties. I'm closing my bank account. I'm changing my address, everything. And after collecting all the income after selling the property, I'm going to live and going to Andhra Pradesh and I'll settle there in some place. So if there is no trail available, how will department find me? I'll change my telephone number. I'll change my address. I'll close my bank account. And I'll going to shift in Andhra Pradesh or any state of India because India is a very big country. You can go anywhere. It's very difficult to search a person in India by the income tax department. So in that case, if department feel that somebody is selling all asset, then why is selling all the asset? So whenever I sell my property, department will get the information by registrar office that Mr. A sell all his land, all his property. If I'm closing the bank account, department will come to know. So in that case, if department think that somebody is trying to sell all his asset, etc., and the reason is to avoid tax, then department will stop him to sell all properties and ask him to pay tax in the same year first. Then he will be allowed to switch to any other place. So this is a very practical case. There is no hard and fast rule. On the case-to-case basis, it need to be checked that either his intention is technically to avoid tax or there is some issue, there is some problem so that he is actually transferring his property. So this is a very practical based question. There is no straightforward rule that in all cases tax need to be collected. It's your property, you can sell it anywhere whenever you want. But if department thinks the intention is to avoid, how the intention will check, that will depend upon case-to-case practical basis. There is no fixed rule. Point number 5 is the last rule for this concept, discontinued business. Discontinued business under section 176. Point number 3 say that if you are starting any business, AOP, BOI, AJP, for a particular event, then you need to pay tax. Now section 176 for normal business. If you're a normal partnership firm, normal company, a normal business, even if a normal business discontinue in any year, then in that discontinued year, previous year income, tax need to be paid in the same year also. Because the next year, It's very difficult to find out the partners, the shareholder, directors, etc. So this is point 5 applicable on all regular business, all normal businesses. So where any business profession discontinued in any previous year, the income from the start of the previous year up to the date of such discontinuance may be assessed to tax in the same year. Okay. The last theoretical part of this topic is concept and definition of income. Now you will understand the meaning of income, the concept of income, the definition of income. It's very important and interesting too. So, concept of income, after the concept of income, it will take 5 or 6 or 10 minutes. After that, I will declare a break. Then when we will resume with a MCQ test and the other rate of tax topic, which is our numerical topic. Okay. So income word cover receipt in the shape of money or money's worth. Income includes both revenue income and capital income both. But the basic structure, the basic definition says the income might be in a money or money's worth. It can be money, monetary or non-monetary both, which arise with certain regularity. So there is one character, money or money's worth. There must be some regularity, like you are doing salary, you are getting salary regular basis, or you're doing business, then you are earning income regular basis, or expected regularity. Actual regularity or expected, and a definite source. We should know from where we will get the money. So if I am doing job, I will get the money from the employer. If I'm doing business, I will get the money after sale of product or after providing a service. So these are basic 3 main character of an income: monetary, non-monetary, regularity, expected regularity, and a definite source. But it does not mean if there is any income which does not fulfill these criteria, it does not mean it will not be treated as income. It will be treated as an income. For example, I sold my property, I sold my house, and I'll get money. So that is fulfilling condition number 1, money. But there is no regularity because I sell my building not on a regular basis. That is my asset. But it will be treated as a capital receipt, and it's also going to be taxable. Like I bought a lottery ticket and I won a lottery of 10 lakh rupees. So there is no regularity, and the source is also not that definite that I'll get money. So in that case also, that will be an income. So if any income is fulfilling these 3 conditions, technically that is revenue income. And if it does not fulfill these conditions, technically that will be a capital income. Both are income, both are liable to tax. Under income tax, even any receipt which arise not from any definite source and not regular is treated under the definition of income as capital receipt. Here are characteristic: regularity, I have discussed with you. Form of income, monetary, non-monetary, both are income. Illegal income, this is a new thing. Illegal income is also income as per Income Tax Act. If somebody is doing illegal business and earns some profit, then he can pay tax on that income also, and the rate of tax will be normal. It's not black money. If somebody is doing business which is illegal and he comes to the department and say, I have earned 50 lakh rupees from that illegal business and I need to pay tax, then department will apply normal rate of tax. If it is an individual, then individual rate will be charged. There is no black money. And after paying tax, that will be a white money. The difference between legal income and illegal income is just 1. Out of legal income, you can claim expenses like purchase, salary, etc. And we need to pay tax on net profit. Clear? But in case of illegal income, there is no expense deduction allowed. Whatever you earn as a sale or receipt, that is going to be full taxable, but the rates will be as normal white money income. That's a very strange thing, but that is income tax. It is strange. So there is no difference between legal and illegal income. You can read it. Application of income versus diversion of income. If you earn some income and then apply it somewhere else, then it is called application of income. For example, I have received 10 lakh rupees as a salary. And out of that 10 lakh rupees, I have donated 1 lakh rupees to some trust. In that case, because I have received 10 lakh initially, so my income will be treated as 10 lakh. Whatever I have donated, that can be claimed as a deduction. That is a secondary part. We will claim it as a deduction, section 80G, etc. That's a different. But initially, 10 lakh will be treated as my income. So if you have received any income and applied to somewhere, then it does not matter whatever amount you applied and where, because you received and earned in your name. So 10 lakh will be your income initially. Clear? Now diversion have a different concept. If I asked my employer that my salary is 10 lakh, I asked him, please due in my name only 9 lakh rupees. And 1 lakh, please directly give to that donation institute what I am going to donate later. So now I asked my employer that you should give only 9 lakh rupees to me and directly pay 1 lakh to that institute. In that case, this is 1 lakh is called diversion of income. In the first case, 1 lakh was called application of income. But in the second case, 1 lakh will be called diversion of income. Because I did not receive it, I did not earn it my name. So what is the benefit? The benefit is this: if I receive 10 lakh and donate it 1 lakh to someone, then I have only 9 lakh rupees because I have already paid 1 lakh to the donation. I have 9 lakh, but I have to pay tax on 10 lakh because application of income is taxable. But in case of diversion of income, I have received only 9 lakh and 1 lakh directly donated. In that case, I have only 9 lakh and tax need to be paid only on 9 lakh. So in first case, I have 9 lakh but need to pay tax on 10 lakh. But in this case, I have 9 lakh but I only need to pay tax only 9 lakh. So what is more beneficial for the purpose of income tax, diversion or application? I suggest diversion. Diversion is technically exempted, but application is taxable. Contingent income, like the contingent liability, is never treated as your liability. In the same case, if you are having a case, court case against someone and you have claimed a compensation for rupees 5 lakh rupees. So until that happen, until that compensation due, it cannot be treated as your income. Gifts can also be treated as your income in some case. In some case, there are exemption. It will be discussed in income from other source chapter. Pin money received by a woman from her husband for dress or personal expenditure, being a housewife, will not be treated as income. So if a husband pays pin money to his wife for her personal expenditure, etc., in that case, that amount will not be treated as income in the hands of his wife. Revenue versus capital expenditure, I have discussed it. There are certain chapters which going to deal with capital receipt. They are capital gain in case of salary, in case of business, in case of other sources. These will be discussed in detail in this chapter, of course. Net receipt versus gross receipt. Income is to be taxable on the basis of net receipt, not the gross. So if you sell 10 lakh rupees and have expenses of 3 or 4 lakh, then after deducting expenses, whatever profit comes to you, that is going to be your net receipt, and these are going to be taxable. This is a definition of income, section 224, and the beauty of this definition that we do not need to read it, because the points have described, and each point it has been referred that in which chapter you are going to read this income in detail. Like first point is profit and gain, refer PGBP head, dividend, other source, voluntary contribution, refer trust provision. This is for salary. So these points are like your future, what you are going to see in this income tax topic. So these all income points you are going to see in the next chapters. So it's not possible to make you understand over here because they have separate provisions, separate concept in very detail. So over here it's not possible to explain. So do not read these topic. Once you will complete your income tax, then come back to this topic and read, and you will come to that you already know this everything. So these were our theoretical concept. These were our theoretical concept. I always say revise twice. That's my advice to make you wise. Believe this is actually true. If you revise your topic twice, if you revise your syllabus twice, your chances to clear that topic or subject is more than 90%. This is practically, theoretically, technically, I'm telling you. If you revise any topic, any chapter at least twice, definitely your chances of success is more than 90%. So when I'll be resume after a break, we will start our MCQ and then we will move on to our rate of tax provision. So see you after 5 minutes. So, Mr. Ram, can we go for a break of 5 minutes or 10 minutes? 5 minutes. After 5 minutes, I'll be back. Welcome back, dear students. So now we are moving on to our MCQ test. What I have promised to you that we will take an MCQ test. So I hope you all are ready to send me a message that you all are ready for the test. Fine. We are going to start this test in a minute. Just need to share the screen. So all are ready to starting the test. You have to write the answer and send it to me. I'll send you a MCQ. You have to read it very carefully and send me your answer as soon as possible. Please, whenever you are answering it, write the question number. Do not write the option only C, D, A, B. No. Just write the question number also. One. Abhi I start sharing. I'm just telling them. So here is the test. We are going to start. I hope you all are ready. Let's see. So this is question number 1. I'll give you 10 seconds almost to answer this question because this is very easy topic. All questions are technically theoretical based, so you can answer it very quickly. And please answer me. Write down the question number and then write the option. So here is question number 1. How many sections and schedules in Income Tax Act 1961? Please choose the right option and send it me into the answer box. Fast. How many sections and schedules in Income Tax Act 1961? Okay, Nitin Gupta answered D. Hitesh Jain saying D. Pooja is D. Prabhas Jain is saying A. Vikasli Abhay D. Sharbya is D. Shrestha Jalan D. Sumit Kumar is D. Hitesh Jain D. Himanshu Gupta is saying A. More answers I need. Fast. Okay, Akash Neel is D. Prabhas D. Raghavan A. Aditya D. Pooja is D. Tanishka D. Madhuri D, of course. Okay, D. A lot of students answer D. The correct answer is, of course, D. Very good. Very well done. Those answer correctly. Those are saying A. Please read the provision carefully. It was 298 sections and 14 schedules. Here is question number 2. Which list give power to both state and parliament? Which list gave power to both state and parliament? Students, these are very simple questions because the topic we covered is just theoretical topics. So it's very simple and I expect you to answer very quickly. Question number 2, which list gave power to both state and parliament? Nipun Gupta is saying C. Swati is saying C. Shrestha Jalan is saying D. Naga is saying C. Mukta Vyas is saying C. Vikashli C. Sumit C. Pooja C. Madhuri C. Prabhas Jain D. Payal D. It's very important. It's very, very, very important to read the MCQs carefully and the options also. Teacher knows where you can be trapped. So kindly, MCQs are not very difficult, but the questions going to be asked in MCQ, you should read them very carefully. The correct answer is D. Most of students are answering C. It's not current list, it's concurrent list. Current and concurrent has different meaning. That's a different list. How can you answer C? So I trapped you. Those are answering D. Those are correct answering it. Those are saying C. That is the wrong answer. Understand? So please be careful. Be careful. Question number 3. Who is empowered to make rules for carrying out the purpose of the act? I'll upload this MCQ with answer also tomorrow, so you can download it also from the portal. Who is empowered to make rules for carrying out the purpose of the act? Of course, income tax that we are talking about. Very well done. You are answering. A lot of you are answering. That's very, very, very helpful for our faculty. Faculty feels so good when the students interact or they answer, because we are here for you. And of course, you should actively participate in these kind of thing, and it really boosts us also. So question number 3. Who is empowered to make rules for carrying out the purpose of the act? This is too simple, very simple. Please answer it fast. Because after this MCQ, now we are going to have the actual income tax topic. The fascinating topic of rate of taxes, how we calculate tax on income. So that is the topic we are going to start after this. And then I'll take the MCQ of that topic. In our next session, you should have a calculator and pen and paper with you, because these are going to be numerical questions, almost all numerical questions. Pooja is saying in question number 2, I thought it was a spelling mistake, sir. I will do the spelling mistake in virtual classes. What are you saying, Pooja? No, it is not a spelling mistake. It's a smart move. Okay, so question number 3, correct answer has been given by Shrivaya. She's saying B. Again, some is saying B. The correct answer is, of course, B. That is CBDT, Central Board of Direct Taxes, have the power to make rules, etc. Okay, this is very, very, very simple. I hope all are. Yajat is saying C. Yajat, what are you saying? Parliament does not make rules. What are you saying? No, wrong answer. C is wrong. The correct answer is B. Okay. Now the question number 4. Read it carefully. It is a good question. Very good question. Please read it carefully and then tell me the correct answer. Mr. Sudeep earned net profit from business. Why I am reading? You should see this. Question number 4. Who will give me the first correct answer? I'll give him or he or she the high five. Okay. Question number 4, correct answer. Be fast. It's a good question. Question number 4. Okay. First answer from Shresht Jalan. The answer is A, and it is correct. High five from Wi-Fi, Mr. Shresht. Okay. Others answer also saying B. Null Jayendra Kumar is saying D. No, it's a business income and income from other sources. So Sudeepan, net profit from business 2 lakh rupees. In my last session, I almost created the same kind of question. That question, it was income from house property. So I personally feel, Mr. Jayendra Kumar, you are also in the last session also took my classes. So you might be thinking it's the same question, and that answer was option D. Do not do that. Please read the question. Do not. Okay. Pooja A, the correct answer is A. Correct. PGP with other sources. Very nice. Mukta Vyas is saying income from other source and capital gain. What are you saying, Mukta Vyas? No, it's completely wrong. Don't give me wrong answers. Next, question number 5. Mr. Superman, Iron Man, and Batman. Okay. Favorite character? My favorite character is Superman, of course, because he's a Superman. Question number 5. What is the correct answer? Superman, Iron Man, and Batman doing business together. So what is the correct answer? Please read it carefully and tell me. Iron Man has died, of course. Very sad. Question number 5. Let me see the correct answer. Who has given it? Vikas Bansal is saying, okay. Vikas, you are correct. High five from Wi-Fi. Okay. Swati is saying C. Okay. Why C? Swati? No. It's a wrong answer. Okay. Pooja is saying B. Hitesh is saying B. Muktavya is saying C. Correct. Okay. Shri Jani Sinha is saying B. Correct. The correct answer is AOP. I have written clearly. They did not register it anywhere. If there is any unregistered organization, if there is any unregistered organization, then it will be always an AOP. Okay, Janinder is saying I'm a fresher. Okay, Janinder, sorry, I thought might you not read the full question and answer me like that. So you should read it properly, and my apologies. Okay. Okay, now question number 6. Which of the following statement is true? So the following statement is true. Question number 6. Which of the following statement is true? Fast. Okay, anybody? Might be I'm not taking the name of each or every student. Still, you have to participate in this. That will show how sincere you are. Sincerity, focus, that's all we need to complete this course. CA is a difficult course, but if you are going to do it correctly, it's not that difficult. What actually people say, it's not like that. If we were planning, we can go to Mars also. It's just a CA. Institute is doing so well for you, providing you classes at your home, free of cost. It is a great step, a great initiative. And the board of studies, the faculties, the coordinators, the technical team is just working for you. They are already settled, but they are doing so hard work just to make you settle. The institute have a lot of cost, it has a lot of expenses, and they are just spending those expenses for you. So you should understand the worthiness of this whole process, which is going for you only. Okay, question number 6. The correct answer is D. Ms. Preeti Panchal is giving question number 1. Answer me right now. Why Preeti? Why are you so late? Okay, the correct answer is D. Vikas Bansal is saying B. No, Vikas, it cannot be B. Previous year, always of 12 months. No, because it can be less than 12 months also. B is saying previous year, always less than 12 months. No. For a existing business, it will be 12 months. For a new business, it can be less than 12 months, but for an existing business, it will always be 12 months. Assessment year can be less than 12 months? No, never. Assessment year always of 12 months? Yes, that's the correct answer. Okay. Question number 7. This is so good that you all are participating in this MCQ test. I'm really feeling so good. Thank you so much, everyone. Mr. Ankit Gupta is saying, मेरा एक भी बार नाम नहीं आता फिर भी नाम में क्या रखा है? Shakespeare said, what is in the name? Whatever it is just in CA. When you will be a CA Ankit Gupta, everybody will know you. So why is that much concern for your name should be taken? And your name is similar to my name. Why you need to? You can see it always. CA Ankit Sharma. You can read only till CA Ankit. That's your future. You can be a CA Ankit Gupta very soon. Okay, so focus on your study, not in name. Miss Vidya saying previous year always of 12 months. No, Miss Vidya. For a new business, previous year is less than 6 months, less than 12 months. So the answer of question 6, what you are giving is wrong. Okay, what is the correct answer of question number 7? It's very simple, very, very simple. Everybody can answer it. Priyansh Saxena is saying A. Why, Priyansh? Why are you saying business start from 10th May? Then the time duration for previous year will be from 10th May till 31st March, of course. How it came from 1st May 2021? Read the answer carefully, read the question carefully. And Mr. Naga is saying B. Again, it's wrong, Mr. Naga. Aditya is saying A. Correct, Aditya. Prakash Abhay is saying C. That is correct answer. The correct answer is, of course, C. Okay. Swati is saying B. Why, Swati? Menka Kumari is saying A. Wrong. Riya Doshi is C. Correct. Raghavan is A. Wrong. Akash Neel is C. Correct. Neha is correct. Yash P. Setia is wrong. While you are saying D. Yash, that's a wrong answer. Surya is saying B, wrong. Ayush is saying C, correct. Tanishka is saying A, wrong. Ankur is saying C, correct. Mukta Vyas, okay. A lot of you have given the correct answer, but still, I want all answers should be correct because these are very simple topics. There is no place to give me a wrong answer because they are so simple and so easy questions. Still, let's move further. Question number 8. And that's also very simple. Please at least give me correct answer of this question, everyone. Please, it's a request. Take your time and give me the correct answer. Don't take your time. It's so simple that you can answer me in like 10 seconds. Question 8. We have to start our numerical part also, rate of tax. And just 2 more questions left. Question number 8. The correct answer of question number 8 is B. Correct. The correct answer is B, not C, Mr. Faisal. It's not, Mr. Faisal is giving 7 question answers. Okay, fine. So everybody is giving me the correct answer till now, but Banathi is saying C. Why? Banathi V is saying C option. No, it's 1st April 1962. Why are you saying 63? One wrong answer. One is Jayendra Kumar is saying 1st April 1961. Act name is 1961, Janen. Act name is this. But the act applicability from 1st April 1962. It has been written in notes also. Okay. So, 2 wrong answer till now. Almost all are correct. No, more are wrong. Himanshu is also wrong. Vaishnavi is also wrong. Pooja Shajjar is also wrong. Why are you all saying 1st April 1961? Income Tax Act 1961, but it came to force from 1st April 1962. Question number 9. Nine is so simple that I think I should give the answer myself. The correct answer is A. Income tax is charged on every person. The correct answer is A. Moving on to our last, please answer me this question. Question number 10. Question 10. Let me see if anybody sent me the correct answer. Which of the following is binding on both assessee and department? The correct answer is somebody is saying B. Swati is saying B, of course. Okay, B. Hitesh is saying C. Aditya is saying B. Hitesh is saying C. Parampreet Kaur is saying B. Vandana Amarkant Chaudhary is saying C. Okay. Hitesh again saying C. Saurabh is saying B. Mukta is saying B. Vaishnavi is saying A. Janisha is saying C. The correct answer is B. Notifications are binding on both. We have studied that circulars are binding only upon the department personnel, but the notifications are binding on both assessee and the department. So that was the MCQ, and thank you so much for the participation. A clap for everyone who have given the correct answer or wrong answer. Does not matter. You have to try your best. That's matter. Income tax rates. So now we will understand how to calculate tax. What is the procedure to calculate tax? How we apply rate of taxes in different scenario. How to calculate tax of different persons. So as we have discussed that there are 8 kind of person like individual, HUF, AOP, BOI, AJP, partnership firm, LLP, company, local authority. So one by one, we will discuss how to calculate tax in these category of person. So before starting from the proper tabular form or a provision, I have a trick to make you understand the provision very easily. First of all, understand that there are persons, individual, HUF, AOP, 8 categories, BOI, partnership firm and LLP. Then we have company, then we have local authority and AJP. Right? So out of these 8 person, first we are taking individual, HUF, AOP, BOI and AJP provision. First we will discuss these rates of tax provision. Before that also, initially we are taking individual provision initially. Now in case of individual, there are 3 categories have been defined by the income tax department. Individuals, those age less than 60 years in previous year, and those are resident in India or non-resident in India. But if age is less than 60 years, so if you are a resident or non-resident, you have a separate category to calculate tax. And we have HUF, AOP, BOI and AJP also in the same category. So these have same rate of tax provisions. Individuals, those are resident or non-resident and less than 60 years. In case of resident, those are less than 60 years, and in case of non-resident, it does not matter the age. So we can say, if you are a resident, individual, and if your age is less than 60 years, you will fall in this category. If you are a non-resident, then age is irrelevant. Whether you are less than 60, more than 60, whatever your age is, you will fall in this block. Plus all HUF, all AOP, all BOI, all AJP, resident, non-resident, does not matter. They will fall in this tax slab block. We can say we have 3 blocks. First block consists individual, those are resident less than 60, non-resident all, plus HUF, AOP, BOI and AJP. Clear? The other block is for individual, resident, those have 60 year or more age in previous year but less than 80 year. So those individuals, those are resident only. And if their age is more than or equal to 60 year but less than 80 year in previous year, they have separate block for tax calculation, because they do not fall in this block, because this block only those resident can come those ages less than 60 year, or non-resident will fall whatever age they are. So if you are a resident and age is more than or equal to 60 year but less than 80 year, so you will fall in the other block. We call them senior citizen. Now the third block is for individual. Those are resident and having 80 years or more age in previous year. Anytime in previous year. Having age of 80 year or more. Those will be taxable as per this block. We will call them super senior citizen. Fine. So due to these three blocks, we will complete 5% tax rate. Individual, HUF, AOP, BOI and AJP. So they 5 are covered in these block. In first block, these 4 HUF, AOP, BOI, AJP covered, as well as those individual cover if they are resident less than 60 year of age, like me, like all of you, I guess, and non-resident whatever age they are. If a non-resident having an age of 85 year, he will fall in this block. And those individual resident whose age is more than equal to 60 year but less than 80 year will fall in this category. And if individual resident age is more than 80 year or equal to, then he or she will fall in this category of super senior citizen. They will give tax like this. Now the provision says, if you fall in this category, first category, then up to 2,50,000 rupees income is exempt from tax. Whatever you earn in the previous year, up to 2,50,000 rupees is exempt from tax. Like if your income is 2 lakh rupees, you are not going to pay any tax. It is exempt. Like for all we and you are resident less than 60 year of age. You can see me, but I can't see you. But I hope you all are less than 60 year. So we all are falling in category number 1. So if you earn 2 lakh rupees in a year, or up to 2,50,000 technically, that is exempt. You might have heard that up to 5 lakh rupees there is no tax. That's a different concept. There is a discount of tax. There is a rebate that will also come. But the basic exemption limit is 2,50,000. Clear? If you fall in this category, then this exemption is up to rupees 3 lakh, 50,000 extra. Up to 3 lakh is exempt from tax. And if you fall in this category, then up to 5 lakh exempt from tax. Clear? So if you fall in first block, whether you're an HUF, AOP, BOI, AJP, resident less than 60 year, non-resident more than equal to 60 year or any age, then up to 250 income is exempt. If you fall in this category, up to 3 lakh exempt. If you fall in this category, up to 5 lakh exempt. Clear? Now, I have a trick to make you understand this whole rate structure in a very simple way. This was the provision what I was telling you. Now I have made a very simple trick to make you understand the concept of this or the rate procedure. So you not need to learn the table what we were discussing. We are going to discuss the theoretical concept what we are going to discuss. You can understand by this mode only. So now understand what is the procedure for all three. All three have same concept of taxability rate. The same concept of taxability rate is something like this. There is an income train. You can say, or I call that income train. Your income train. Okay? And the first platform of your income is 5 lakh rupees. Up to 5 lakh rupees, department has made the provision for all the three categories. Same provision for all above three categories. That if your income comes if you earn income in a previous year up to rupees 5 lakh, the first station is up to 5 lakh rupees for my income train. Then if tax is going to be charged, the tax rate will be only 5%. Clear? If you have income up to 5 lakh rupees and tax need to be paid, if tax need to be paid, because in third category the exemption is 5 lakh rupees, so there is no need to pay tax because 5 lakh is exempted. But I am saying if tax need to be paid, then the income train will be taxable at the rate of 5%. Clear? Other second platform is 10 lakh rupees. So from 5 lakh to 10 lakh, that means next 5 lakh. So first 5 lakh, this is first 5 lakh. If taxable, the rate is 5%. Clear? And the next 5 lakh, if it is going to be taxable, the rate is 20%. It's very simple arithmetic. Nothing is difficult. I've told you there is nothing is difficult in this world. If we have interest, if we have focus. So I've told you, enjoy this journey. You might feel frustrated. You might feel depressed at times. You might feel tensed at times. You might feel panic at times, but it's a part of this journey. Everybody is going through this. But those who are going to supersede all these things, going to be a chartered accountant. Okay, so it's not only the study, it's everything. Study, including studying the management of your work, your other life, your family life, your study life, and the way you manage your things. That is also important. You might have seen, let me tell you an example, a very interesting example. You might have seen that there are some students, those are more intelligent than you, but they did not score marks better than you in examination, whether it's foundation or whatever it is. And there are also those students, those are not technically intelligent up to your intelligence. They are less intelligent than you in your school life, etc., or in coaching, or in during these classes. But they might get better marks than you. How it's happening? If the intelligence is only criteria, then it should be like this, that the intelligent students should have more marks than the normal average students and vice versa. But it's not happening. There are super intelligent also. Those are not getting good marks in comparative to normal intelligent students. Why it's happening? Because it's not only knowledge. It's not only brilliancy. It's all about a composition of everything. Like this institute has made all subjects, like they are teaching you law, they are teaching you audit, they are teaching you cost, FM, accounts, tax, etc. They are included the training concept. Why? Because it's a package. It's not only study. They are the practical articleship is why just to grooming you. Just you should not be a bookworm. You should not be only the knowledge of books. You should have the practical knowledge. How we do audit, how do we go for bank audit, how we manage our clients, etc. So in the same way, it's not only intelligence that will make sure that you will clear this course. No, it's all about management also. So that's what I'm saying. Always try to manage each and everything. Your study, your life, and till examination, if you will able to manage each and everything, you will be, of course, going to clear this examination. So what I was discussing, we were, that is income train. If that is up to 5 lakh rupees, that is going to be taxable at the rate 5%. If any income fall between 5 to 10 lakh, it is going to be taxable at the rate of 20%. And if any income exceed this 10 lakh rupees, then it is going to be taxable at the rate of 30%. And this concept is applicable for all above categories, whether it's this, and this. Now understand, if the question came for this category, then this category has 2,50,000 rupees exemption. So if income is rupees 4 lakh, in this first category case, if I'll give you the income is rupees 4 lakh and ask you to calculate tax, then this 4 lakh will fall in this first 5 lakh rupees. And out of this first 5 lakh, exemption is 2,50,000. So if you have 4 lakh rupees income, that means 2,50,000 will be exempt, and here only 1,50,000 will be taxable at the rate of 5%. Understood? Because 250 is exempted. That means if you have income of 4 lakh rupees, then 250 will be exempted and 1,50,000 will be taxable at the rate of 5%. Agar this category question comes into the examination and it says income is 6 lakh rupees. Now this category up to 5 lakh rupees, out of this 6 lakh up to 5 lakh belongs to first 5 lakh rupees income train, and we have exemption of rupees 3 lakh. So up to 5 lakh, 3 lakh will be exempt. So only taxable will be 2 lakh at the rate of 5%. If you have given 6 lakh rupees income of this person, then up to 5 lakh rupees, 3 lakh will be exempt. So taxable will be 2 lakh rupees at the rate of 5%. And balance exceeding 5 lakh is 1 lakh rupees because income was 6 lakh. Then 5 lakh treatment has been done in this first money train. That is 3 lakh exempt, balance 2 lakh at the rate of 5%. That means 1 lakh, 10,000 rupees. And this 1 lakh exceeding will be taxable at the rate of 20%. That means 20,000 rupees. So total tax will be 20 plus 10,000. That means 30,000 rupees. Let me clear this and write the examples. So we have a train. I just explained it to you. We have a train up to rupees 5 lakh. If I have any income fall in this, tax rate will be 5%. The second station is 10 lakh. The rate is 20%. The balance is going to be taxable 30%. And what we need to know, there is resident more than 60 year, less than 80 year, have 3 lakh rupees exemption. There is resident more than equal to 80 year, have 5 lakh resident, having 11 lakh rupees income. Calculate tax. Now 70 year and non-resident. All non-resident fall in this category, 2.5 lakh. So that means we will calculate tax like this: 11 lakh rupees income, up to 5 lakh, 2.5 lakh exempt. Balance how much left? 2.5 lakh, and that is going to be taxable at the rate of 5% because this fall in this category. Starting 5 lakh, 2.5 lakh rupees basic exemption, then left with 2.5 lakh rupees. That is going to be taxable at the rate of 5%. That is 12,500. Then, because income is 11 lakh, then next 5 lakh will fall in this category. First 5 lakh has treatment, tax is 12,500. Now next 5 lakh taxes at the rate of 20%, that will come 1 lakh rupees. And the balance, because 11 lakh, 10 lakh has been finished, remaining 1 lakh is over here, and that the rate is 30%, that is 30,000 rupees. Total tax will be 1,42,500. It's this much simple. Just a arithmetic. If you will try 3-4 questions, you will be able to calculate it like this. Find next example. Suppose Mr. B, aged 85 years, resident, income is 8 lakh rupees. So if you are a super senior citizen, then out of that income 5 lakh will be exempt. So his 5 lakh out of that 8 lakh will fall in this category. And how much exempted? Full 5 lakh is exempted. So there is no income to be taxable up to rupees 5 lakh. Balance 3 lakh will fall in this category. So what is the rate? 20%. So tax will be simple, 60,000. So I have made examples also for you. Moving on to the provision now. I hope it's easy. Okay, fine. If some students send some queries which I didn't take due to MCQ, you can send me again, because due to MCQs, there are a lot of queries. Your answers are there like 400, 500. So it's very difficult to find your queries. You can send me your queries again if there is anyone. So I'll take that query before ending my class. Now moving on to the provision theoretically, and this is the diagram, this is the tabular form. So you can see what we were technically studying is like this. In case of any other individual, male, female, less than 60-year resident, all non-resident, male, female, more than less than 60 year, and HUF, AOP, BOY, AJP. We have made this table. How? First 250 exempt, so rate will be nil. Next 250 will be 5%. Why next 2,50,000? Because the first claim was 5 lakh rupees, taxability is 5%. So if 2,50,000 is exempt, then only 250 can be taxable with 5% rate. Balance 5 lakh is at the rate of 20% and balance will be at 30%. Same in case of 60-year male female, first 3 lakh is exempted, then 5% can be applicable on next 2 lakh rupees. Next 5 lakhs, same rate 20%, balance is 30%. Super senior, first 5 lakh exempted, so 5% rate will not be applicable because 5% applicable only up to rupees 5 lakh. Next 5 lakh is 20% and balance is 30%. Okay. Now rebate. There is a concept of rebate. Rebate means discount. There's a discount provided. As I have told you that in our country up to 5 lakh rupees, there is no tax. But we have seen only 2,50,000 benefit for you or 3 lakh. 5 lakh benefit only for super senior citizen. But it's not like that. 5 lakh benefit for all of us. But in a different way. There's a rebate of 12,500 if total income is equal to or less than 5 lakh. And this is only for individual resident. These are not applicable for HUF, AOP, BOY, AJP, and not applicable for non-resident. This rebate is only applicable for individual, those are resident. That is up to maximum 12,500. So if your tax is 12,500, then you can have a discount of maximum up to 12,500. How the discount will come? If the examples are given, we will discuss it. Calculation of tax format, that is very important. First, you have to calculate tax as per the rates above what we just discussed. Then we will provide the rebate under section 87A. This 12,500 rebate you have to deduct after calculating tax if applicable. If applicable, that means if you are an individual resident and your income is up to rupees 5 lakh. After that, we have to apply surcharge. We have to add surcharge. What is surcharge? We will discuss. Total will called A, and then on that total A, we will impose 4% cess. Cess is education cess and secondary higher education cess and health cess. So 2% is education cess, 1% is secondary higher education cess, and 1% is health cess. You can impose 4% together on the total of value A. And whatever will come, that will be our final tax. So it's my request to you, it's my advice to you that please follow this format. Always calculate tax minus rebate plus surcharge plus cess. That will really help you and your question mostly will be correct. Now the examples are here for your practice. Like if total income is 2,60,000, individual resident less than 60 year. If total income is 260, calculate tax. So if income is 260 and individual less than 60 year, that means exemption is 2,50,000. And balance 10,000 will be taxable at the rate of 5%. So tax will be 500. Total tax is 500. But now we will get credit. That means rebate. And rebate is up to rupees 12,500. That is maximum. Rebate is 12,500 if your income is up to or less than 5 lakhs. So your income is 260. So we can have rebate of maximum 12,500. But it does not mean that you need to deduct 12,500 directly out of 500. If you deduct rebate, credit rebate, same thing. If you deduct rebate of 12,500 here, then there will be negative tax 12,000. That means government will pay you 12,000. That's not going to happen. Otherwise, you all must be getting 12,500 rupees at your home. But that's not the scene. The scene is maximum rebate can be 12,500. But if tax is less than 12,500, then the rebate will be up to the amount of tax. Or we can say rebate will be 12,500 or your tax, whichever is lower. Fine. The other example, if your income is 2,69,500, suppose, then tax will be calculated on 19,500 because 250 will be exempted. The tax will come 975 rupees. Again, you can claim 12,500 rupees rebate, but of course the tax is 975, then maximum credit can be upon 975. Your tax cannot be negative due to rebate. There are more examples, like third, you can solve it like 5 lakh rupees. Now, you can see in case of income is 5 lakh, then you will avail full rebate. If income is 5 lakh, your tax will come 12,500. Then you can claim the full rebate of 12,500. So technically, if your income is 5 lakh rupees, the tax will come 12,500 and it will be full allowed as your rebate. So tax will be 0. That's why we say that in our country, up to 5 lakh rupees tax is exempted or not going to pay any tax up to the income of rupees 5 lakh. Okay. If your income is 6 lakh, now no rebate will be applicable because income exceeding 5 lakh rupees. If income is 6, your tax will come 32,500. Total will be 32,500 because exceeding 5 lakhs, so no rebate. In this case, cess will applicable. Education cess and health cess is 4%. That will applicable on 32,500. 4%. Total tax will be 33,800. This is example for senior citizen. You should try yourself. It's very easy. Senior citizen, the super senior citizen cannot avail rebate. Why? Because their income is already exempted up to 5 lakh rupees. And if income exceeding 5 lakh, there is no rebate provision applicable. Important notes, rebate will provide before calculating cess. Now the surcharge comes into the picture. Surcharge is called tax on tax. How this is going to applicable? First of all, I have told you, you should calculate income tax. Then you should deduct rebate. If applicable, you have to deduct rebate. Whatever come, surcharge will applicable on this value. That is called tax on tax. So surcharge will not applicable on your income. Surcharge will be applicable on your tax. In different situation, surcharge rate will be different. Whatever surcharge that will be added and the value will be liable for cess. Cess is fixed 4% on this value, but surcharge is not applicable in each case. Surcharge applicable only in case of individual when your total income exceeding 50 lakh rupees. This is your total income. So if it is exceeding 50 lakh, then only surcharge will applicable. But if surcharge is not applicable, cess will always be applicable. For example, your income is 40 lakh rupees. Then we have to calculate tax, whatever it is. Rebate not applicable because rebate applicable up to rupees 5 lakhs. So whatever tax, that will be your this value. Surcharge also not applicable because it applicable when income exceeding 50 lakhs. So surcharge will be not applicable. So now this total will also come here. Cess will always applicable 4% fixed. If surcharge, then tax plus surcharge, that value liable to cess. Otherwise, no surcharge, then directly this value liable to tax. Cess does not have any condition. If there is tax, there will be cess. But if income is 60 lakh rupees, then tax, rebate not applicable because income exceeding 5 lakh. Now surcharge will also applicable. And now cess will applicable on this value. So if there is tax, then surcharge will always be there, whether tax plus surcharge or with only on tax value. Surcharge rates are different depending upon your total income. So surcharge will be 10% on tax if your total income exceeding 50 lakh up to rupees 1 crore. Surcharge 15% on tax if total income exceeding 1 crore up to 2 crore. That does not mean that if your income is 1.5 crore, then from 50 lakh till 1 crore will be 10%. or more than 1 crore up to 1.5 lakh, 15%. No. If your income exceeding 1 crore up to 2 crore, for example, your income is 1.5 crore, then whatever tax will come, surcharge rate will be directly 15%. How it will happen? I will give you an example. 25% if your total income exceeding 2 crore up to 5 crore, and 37% if your total income exceeding 5 crore. Education says 1 crore 60 lakh, then we have to calculate the tax. For example, I am writing on tax. For example, that is not the exact tax. I am just writing down the tax. For example, tax is 54 lakh. For example, rebate not applicable, of course, because income exceeding 5 lakh. This will be your tax. Now surcharge will be applicable. Surcharge rate will be 15% because income fall from 1 crore till 2 crore situation. 15% of this value we will calculate, and then the total whatever it comes on that total 4% cess will be applicable. So surcharge will be applicable like this. If the income is 6 crore, then whatever your tax value, rebate not applicable, then surcharge rate be 37% of this value. We will add it. Total will be liable for 4% cess. A practical question, we will do it, of course. Back to the notes. So these were the rates, surcharge, rebate, cess provision in case of individual, HUF, AOP, BOI, AJP. Moving on further, in case of partnership firm, there is very simple tax provision. The most complicated tax provision is only in case of individual HUF. They have slab rate, different rate, 5, 20 or 30. In other case, there are very single rate that like partnership firm and LLP, they have single rate of 30%, no exemption. If a partnership firm have 10 lakh rupees income, tax is directly 3 lakh. If its income is 1 lakh, tax is 30,000. If income is 10,000, tax is 3,000. If income is 100 rupees, tax is 30 rupees. And surcharge single rate, 12% surcharge will be applicable if income exceeding 1 crore. No rebate concept. Cess will always be applicable. Cess is applicable in all cases, whether individual, partnership firm, etc. And the rate is 4%. It has been written after all these cases. That's in all above cases, cess is 4%. In case of domestic company, I have told you, if in case of domestic company, tax rate will be 30% and 25% depends upon the turnover. But domestic company provision is not in your syllabus, so you can skip it. Foreign company also not in your syllabus, so you can skip it. Local authority tax rate is 30%, same copy paste provision as partnership firm. Cooperative society provision, that is also not applicable in the case, but you can just read it. Like in domestic company, foreign company, you can just read the rates, but numerical provision will not be asked. It can be asked just the rate. First 10,000 is 10%, next 10,000 is 20%, balance liable to tax at 30%. Now we can say the last topic of numerical topic is marginal relief. After this, almost our topic of rate of tax is going to finish. Now, what is the concept of marginally? Before that, let me take the queries. What are the queries I have? Let me see. Okay. सबके answer आ रहे हैं. Whatever those who are sending me the answer, I have received all the answer. Okay. Okay. Vishal asking how we can judge the age of HUF as members and co-partners may have different age. In case of HUF, AOP, BOI and AJP, we do not require to judge the age because age is irrelevant because they all have in a same category block. Only individual has rate age category, but HUF etc. do not have any age requirement. They will always fall in the category. First category, that is 2,50,000, etc. No age requirement. Okay. Sir, does the owner of the company and company itself will differently pay tax? Company and the owner are separate legal entity. Of course, they pay different tax. Shareholders are technically the owner of the company. they pay tax on their individual income, etc., and company need to pay tax separately. So will the tax block for citizen and super citizen apply for R, NOR? Yes, resident means resident and ordinary resident only. R, NOR is a different concept. We will discuss it when the chapter 2 will start. Okay. So if income is 5 lakh, tax charge on whole amount, or person will get 2,50,000 exemption, because I have just explained it to you. I hope it's clear now. Jyoti is saying, I love the way you motivate us. Thank you. It must need it. It's a privilege that I can motivate you. And if you are feeling that you are motivated, I'm really thankful, of course. Okay. Next is Fareen Fatima. Sir, if a person is below 60 year and he earned 5 lakh, then will the tax be charged on entire 5 lakh or on 250? Of course, if he is of 60 year of age, below 60 year of age, then firstly, 2,50,000 will be exempted and balance 2,50,000 will be liable to tax at the rate of 5%. That is 12,500. And he can claim rebate if he's a resident, so tax will be nil. I hope this query is before when I was explaining the provision. I hope it's clear now. Okay. How Pooja is asking how we get to know person is resident or non-resident when I'll teach you chapter number 2, which is going to be on 18th, I guess, the session number 3. And then in that chapter you will understand what is the meaning of resident or non-resident, etc. Okay. Next, Sumit Kumar. Sir, if someone has won lottery, then the winning person will get the amount after deducting tax in previous year, or tax will be deducted in the assessment year. Sumit, that's whatever you are asking. It's a actually question which will be answered in next topic. That's a TDS concept. We have a concept of tax deduction at source. And yes, in case of lottery winning, the TDS will be deducted at the rate of 30%. And you will get the balance amount. So in case of certain income, there is a concept of TDS, and that is need to be deducted at the time of earning of that income. And the tax deducted will be adjusted in the assessment year when he will file return of income. Fine. So this is the topic which is going to be discussed in the TDS topic. Okay, Mr. Akash Neel, sir, does that mean exclude the portion that is exempt, then calculate tax on balance remaining in each slab? Exactly. So whatever exemption is 2,50,000, 3 lakh or 5 lakh. So if your income is fall in the category of first 5 lakh category, then first you have to deduct 2,50,000 and you need to calculate tax on the balance amount. You will try the examples I have given to you and you will understand it's very easy. You will practice it, you will be really easy to understand the whole process. Okay. So in the given example, okay, Mr. Rakib, sir, I have seen your batch 4 lecture. Is it same for November 22 attempt? Yes, May 22 and November 22 have same provision. There is no difference. Okay. As Naga, sir, in the given example, 5 lakh minus 260 into 5%. Not 260, should be 250, not 260. But you are saying tax 500. No. That income was 2,60,000, Naga. Okay, I understand what you are confused. Why you are confused? In that example, income is giving 2,60,000. You not need to deduct it from 5 lakh. You understand? If your income is only 5 lakh, 2,60,000, then how much exemption you have? 2,50,000 exemption you have. 5 lakh is just saying that up to 5 lakh, income will taxable at the rate of 5%. I have made this diagram like this. This is 5 lakh. And now the question is, if you have income of 2,60,000, how we calculate tax? So that question fall in the first category, where is exemption of 250. So out of that 5 lakh, 2,50,000 is exempt from this income. You need not to deduct it from 5 lakh. This is the exemption limit. This exemption limit will be deducted from the income given in question. So if income given in question is 2,60,000, then we have exemption is 250. So that means only 10,000 liable to tax at the rate of 5%, because first 250 is exempted, balance 10,000 liable to tax at the rate of 5%, that is 500. I hope it is clear. Okay. Next is Ms. Kiran, exemption of 5 lakh is not subject to rebate if total income of an individual whose age is more than 80 years, but if the income is of an individual less than 60 years, then rebate is applicable, right? Because if your age is more than 80 years, then your up to 5 lakh income is already exempted. Then how you will claim rebate? For example, if a person whose age is 85 years and income is 6 lakh rupees, then tax will be calculated only if income exceeding 5, because up to 5 lakh the exemption is there. So no need of any rebate. And as soon as income exceeding 5 lakh rupees, rebate will be closed. So if his income is 6 lakh, then up to 5 lakh exempt, only 1 lakh need to be taxed at the rate of 20%. That is 20,000. Cess applicable all kind of person. Yes, Mr. Akash, cess is applicable on all kind of person. Everyone need to pay tax. Everyone need to pay cess if there is tax. Okay. Okay, Mr. Nal Jarinder Kumar asking a good question. If my birthday is on 31st March in previous year, very good question. And going to be 60 year in next year, I will be benefit of 60 year above. Even on 31st March, if you are going to attain the age of 60 year, as you are saying, your 60th birthday is on 31st of March. That means you will be treated as 3 lakh rupees limit person. You will be treated as senior citizen for that year. So if somebody is attaining the age of 60 year on 31st March, even that, the benefit of citizen he will get in this previous year. So you will get the benefit of 3 lakh rupees even if your birthday is on 31st of March. There is amendment also in this case, which you will read in final level, that even if your 60th birthday is on 1st April, this is also very interesting amendment. If your birthday is not on 31st March, if it is on even on 1st April, even then in that case, you will get the benefit of senior citizen in the preceding year. Yes, but if your birthday is on 2nd April, then you will not get the benefit. So not on 31st March, even on 31st March, or even on 1st April if you are celebrating your 60th birthday. Even in that case, in the previous year, you will be treated as a senior citizen. Okay. Swati, if the age is 60 to 80, rebate will be 12,500 or 10,000. Correct? Very good question. The rebate will be maximum 10,000 rupees in this slab rate. But the income tax has just started. So in some cases, there are some special rate income, like capital gain have 20% rate structure also. If you have a capital gain income, then it can be possible, then income is up to 5 lakh, but tax is more than 10,000 also. So we are not discussing that topic. You will be get confused, but for now we can say, Swati, yes, we can say whatever rates we have discussed till now, the rebate will be 10,000 in that scenario, because senior citizen have only 10,000 rupees tax up to rupees 5 lakh. We can say right now, but this is not completely correct. When you will study the calculation of whole tax, this is not the whole tax we are discussing. There will be a topic in future in which you will be taught how to calculate tax on special rate income also. Then you will understand what actually 12,500 is also possible in this case. Not now, not for now this. Fine. So moving on to our provisions, and that was margin relief. So it will take 10 minutes to understand, then we can close our class and our topic also be covered. And whatever will be left in this topic, so we'll do one thing, because the residential status topic has 2 sessions, 18th and 20th of May. So that is not that huge topic what we need to cover. So whatever will remain for this session, I'll take in the next session of residential in the starting also. So I'm trying to cover it, but if it's remaining 5 or 10 minutes extra, then we will take it in the next session. So concept of marginal relief, you will hear that, and if you are hearing it first time, you're going to be shocked. What it says that suppose if it happens, what happened, that tax exceed the income. It's very interesting. Now you feel the income tax. It's a beauty of income tax, how fascinating it is. What it says, suppose if your income is 100 rupees and your tax is 100 is 5 rupees. If this happened, income tax say, suppose if it happened that your income is 100 rupees and your tax is 105 rupees. So we will give you discount of 5 rupees from your tax. So now you need to pay tax of rupees only 100. So this is very amazing because income tax cannot exceed the amount of income. So if it happens that your income is 100 and your tax is 105, then we cannot charge tax more than your income. So we will provide you a discount, and that discount they are calling marginal relief. So you will get the 5 rupees marginal relief out of the tax. So now your tax is 100. It is something like this, that I have money in my pocket, rupees 1 lakh, and I am going from a jungle. I don't know, but I am going from a jungle. Why I am going from jungle? Just imagine I am going from jungle. And some people came and say, how many money you have? I said 1 lakh rupees. You can rob 1 lakh rupees from me. They saying, no, we need 1,20,000 rupees. I told them I only have 1 lakh rupees. You can take that whole money from me. But they say, no, we need 1,20,000 rupees. I proved them that I only have 1 lakh rupees. So they say, okay, 20,000 rupees is discount to you. Give us rupees 1 lakh. So this is this kind of scenario that income tax say, if your income is 100 and tax is 105, obvious how you will pay tax, which is more than your income. So department say, okay, we will take your whole income and the difference is your discount, or we can call it marginally. Now there must be a question that must be striking in your mind, that should be striking in your mind if they are working properly. If they do not strike yet, then there is some problem in your mind. Okay, so there must be a question how it will happen. It's not possible because the rates I have told you, even in that case the maximum rate is 30%, 5, 20 and maximum rate is 30%. And if we charge surcharge on that rate, 37% rate of surcharge maximum, and that is not plus 37%, that is 37% of this 30%. So that might be around 9 or 10% almost. And then 4% cess of both of these, like 40% we have, and then 40% of this. So almost the total recovery including surcharge and cess cannot exceed 42% something. Understand? So that is the maximum amount which can be collected from you by the department, including highest tax rate, including highest surcharge rate, and including the cess. It will be like 42% to 43% almost. So now if the maximum rate of tax can be 43%, then if my income is 100 rupees, then tax can be maximum 43 rupees. And we are only talking about the tax, not the interest, not the penalty. Marginal relief is say if only tax is exceeding. And it's only for white money also. We are not talking about the black money also. So how it will happen that I have 100 rupees? I'm trying to explain this marginally beautiful concept with an example. As soon as I will solve the example and when we will reach at the solution, then only you will be understand why it happened, how income can be less than tax, how tax can be more than income. Before that, you should just focus what I am telling you. Do not create question in brain. Why sir doing this? Why he's telling? Why it happened? How it happened? No, don't do this. So I am just explaining you the best way it can be explained with an example. And as soon as we will end the example, then you will click that, okay, that was the whole thing. Then like the movies, the suspense movie, what happened? The movie runs. We have so much of confusion in our mind. And when the suspense revealed, then we linked each and everything. Okay, that's why it was happening. Understand? So please be with me and just see what I am saying and just focus. Okay. So there is a very simple thing, marginally, and it's a very good thing for you that in an examination, the fixed question will be asked. The same pattern question it will be asked. The question will be like this. Examiner will give you an amount. It will say Mr. Ram income is 51 lakh rupees. Aged 40-year resident. To make you understand that what rate you should be applicable, and then it should be written like this: calculate marginal relief and tax for Mr. Ram. This will be like this for sure. Clear? Now, calculator. Now, there's a specific pattern to solve it. There's a specific question to be asked. There must be a single line question. Some income will be given in question, and examiner will ask you the MR and tax. And let me tell you, the income will be of that amount on which surcharge applicable always. In case of individual, surcharge is applicable only when income exceeding 50 lakh. We have seen that. If more than 50 lakh, surcharge is 10. So it will always be given that amount of income on which surcharge is applicable. If it is less than 50 lakh, you can answer it no marginally. Again, do not think why. As well as I will solve it completely, you understand, you will get all the answers of your question. Okay, so just have patience, control your brain, just relax. Fine. So Mr. Ram income is 51 lakh, age 40-year, resident, calculate MR and tax. We have the specific fixed solution pattern. This is the solution. 3-step solution. Step number 1. We have to write like this: income, heading, and tax. So step 1 says whatever amount of income is given in question, write it down. We have given question of 51 lakh rupees in question. So whatever income is given in question, write it down below the income heading and calculate normal tax on it. Calculate tax without cess. Always calculate tax without cess. We need to calculate tax without cess. You can use tax, rebate, surcharge, but cess will be applicable always at the end, because cess is the amount which is collected by department, income tax, but sent to the other department like health department, medical department, etc. So cess is just the collection authority, income tax is just the collection authority for that. So it will applicable always at the end. So we need to calculate tax if the income is 51 lakh rupees with the normal provision. You all know the normal provision, that is because the case of Mr. A, age 40 years. So category 1 case, that means first 2,50,000 nil tax, next 2,50,000 5%. This is up to 5 lakh rupees income train. Next 5 lakh, it will be 20%. That means 10 lakh rupees, and balance. How much balance left after 10 lakh? 2.5, 2.5 and 5. That means 10 lakh has been complete. The income is 51 lakh. Balance is 41 lakh and the tax rate will be 30%. Understand? If this is my money train, then up to 5 lakh, 2.5 exempt, balance 2.5 is at the rate of 5%. And balance 5 lakh is 20. And balance 41 lakh is 30%, like this. So what will be our tax liability? Let's see. Tax will be this. I just calculate the normal tax as per the provision I have told you, 13,42,500. Rebate will not be applicable because income is exceeding 50 lakh rupees. Okay, sorry, 5 lakh rupees. So rebate is not applicable. Fine, I will write it down. Rebate not applicable, but surcharge will be applicable at the rate of 10%, because if income is more than 50 lakh till 1 crore, surcharge will be 10%. Surcharge will be 134250. After adding this, my tax liability with surcharge is 147,6750. Surcharge is not applicable up to rupees 50 lakh. This is fixed. In first step, you have to write down the income given in question. In the second step, you have to write down that amount of income up to which surcharge is not applicable. If it is a partnership case, so in case of partnership, surcharge applicable if income exceeding 1 crore. So suppose if in this question it's a partnership firm and income is given 1 crore 51 lakh, then 1 crore 51 lakh we will write over here, and over here we will write 1 crore. So we need to write that income up to which surcharge not applicable. Up to which surcharge not applicable. So that is 50 lakh in case of R. Now we have to calculate the tax in income is rupees 50 lakh. Normal case, of course. So the tax will be 13 lakh 12,500. Rebate, of course, not applicable. No rebate and no surcharge. So that will be my tax liability, 13 lakh 12,500. Now the last step comes into the picture. Step number 3 is difference. Now I have to calculate the difference of income heading and of course this tax heading. So you can see the income has been, difference is only rupees 1 lakh. Like if income was 50 lakh and now the income is 51 lakh. So income has been increased from 1 lakh rupees only. But the tax difference has been exceeding. For example, up to 50 lakh, tax was 13 lakh 12,500. And just when we increase the income of rupees 1 lakh, the tax is now 14 lakh 76. That means tax has been increased by 164,250. So income just increased by 1 lakh rupees, but due to the increment of only 1 lakh, the tax has been increased by 1,64,250. It's the same thing what we were discussing, that income is 100 and tax is 105. Now the extra income if Mr. Ram earned, and that is only 1 lakh. So in that case, if he was earning up to 50 lakh, he needs to pay only 13 lakh 12,500. And if his income exceeding rupees 1 lakh, then he needs to pay 1 lakh rupees plus extra 64,250 also. Because now he need to pay 1,64,250. So his income increased by 1 lakh, but tax liability increased by 1,64,250. So in that case, department say this is wrong. We cannot collect tax more than income. So department will provide you a discount. And how we need to calculate that discount? Out of this tax increment, you have to deduct this income increment. This 1 lakh should be deducted out of the tax amount. So difference would be called marginal relief. That is 64,250. Or we can say in a normal sense, whatever the excess over income, that will be called a discount or will be called a marginal relief. Now what we will do with this marginal relief? We will deduct this marginal relief from our tax liability. The same we did. If income is 100, tax is 105, the difference 5 we deduct from the tax value. So this 64,250 will be deducted from the tax amount. So now it will come So now our tax will be 14,12,500. You can see up to 50 lakh tax was 13,12,500. And now because income exceeding with 1 lakh rupees, so now the final tax will be of course increased by only 1 lakh. It's the same mathematics. It was increased by 1,64,000. We deduct 64,000 from this. So automatically it will come upon 14,12,500. The income exceeding 1 lakh, the tax will also be increased by 1 lakh. Now, if in the question asks what is the marginal relief, only if the question asks what is the marginal relief, my answer will be this 64,250 end. But if they are asking for tax also, then I have to deduct this marginally from the tax, and then I now have to apply 4% cess on this 14,12,500. So you have to calculate cess of 4% on 14,12,500 plus 4%. Then whatever will come, that is your answer of tax liability. That's very interesting. You understand? And let me tell you, it will not happen always. It's not like this. Then whenever you will earn more than 50 lakh, it will happen. No, it will work like from 54 lakh rupees till 54 lakh rupees. If in question, I'll write a question that Mr. A, age 40-year, resident. His income is 55 lakh rupees. Calculate marginally. Step 1, 55 lakh rupees, and we will calculate tax and plus surcharge also. Then step 2 again, fix 50 lakh rupees, then only tax. Now in this case, income will increase by 5 lakh rupees, but tax will not increase by this amount. Tax will be, I guess, might be increased by 3 lakh rupees. So if income is more than the increment of tax, then there will be no marginal relief, no MR. So whatever your tax is coming, that is your answer, plus you will add cess. You can write it down, there is no MR. MR is applicable only when, if this is 5 lakh and this is 6 lakh, then 1 lakh will be your MR. So it will not happen. It works from almost 50, more than 50 lakh till 53, 54 lakh. So if in question any income is given, you have to calculate whether difference of income is less than difference of tax, then MR available. If difference of income is more than the difference of tax, then there will be no MR available. One more clarification for marginal relief. It says if in question it is like given this, calculate MR if income is rupees 3 crore in case of individual. If question is silent about the individual age or residential status, then you will always treat it as first category case, 2,50,000. Okay. So now if income is given 3 crore, now I have to make a slight change. Step 1, I have to write down 3 crore. I have to calculate tax. And what rate of surcharge will be applicable? 25%. Because if income is from 2 crore to 5 crore, then surcharge will be 25%. Fine. No cess. So this is my tax. Now I'll take step number 2. Now, because in the earlier question, there was 51 lakh rupees income. So we took that point in step number 2 up to which there was no surcharge applicable. But if income is exceeding that limit on which surcharge rate has been changed, then now step number 2, we need to take that income which is before that surcharge rate. So when surcharge rate is 25% from 2 crore, more than 2 crore. So now up to 2 crore, the surcharge rate is 15%. So we will write now our income 2 crore. Then now we will calculate tax and surcharge will be 15%. Then we have to take the difference of these two categories. So if income is more than 50 lakh, but less than 1 crore, then we will write 50 lakh in step number 2. But if income is exceeding surcharge rate like more than 1 crore, 2 crore, then the step 2 will come that income which is before that rate of surcharge, what we have been given in first number step. Fine. So for example, if the income is 6 crore, then surcharge rate will be 37%. And now we will take over here 5 crore income because till 5 crore surcharge rate is 25%. So we have to take in step number 2 the preceding surcharge rate provision. So if it's 51 lakh, then the preceding surcharge rate is up to 50 lakh 0. If it's more than 1 crore, then the rate is 15%. But now we will take the income of rupees 1 crore till surcharge rate is 10%. So there are certain example, already solved example is given. So you will do them and you will understand what I am trying to make you understand. Okay, fine. So this was the provision regarding surcharge. Here is the provision of marginally, all theoretical provision. All cases has been written. There is the concept what I have just taught you. Calculate tax on total income of such person, total income and tax without cess. Everything has been written. Fine. This was step number 2. What I was trying to convey. Calculate tax on total income of such person. For such limit, surcharge not applicable. Fine. If it is income is given in question 51 lakh, 52 lakh or up to rupees 1 crore, then we will take 50 lakh rupees up to surcharge not applicable. And if income is more than 1 crore, that means then we have to take that income which have the last surcharge rate applicable. That is surcharge rate change on such person. So if in above category surcharge rate is 10%, then we have to take 50 lakh. Then surcharge is 0. If individual cases surcharge rate is coming in first category is 15%, then we have to take 1 crore when surcharge rate was 10%. If the income is given the surcharge rate of 25%, then we have to take 2 crore when surcharge rate was 15%. When income is given more than 5 crore when surcharge rate is 37%, then we have to take 5 crore when surcharge rate was 25%. So we have to take in step number 2 that income which is preceding to that, the income which is given in step number 1. We need to find the difference, and the difference if exceeding then MR, if not exceeding then no MR. There's a solved example. If your income is 51 lakh 50,000, then you have to calculate first tax plus surcharge. Step 2 it will be 50 lakh because the previous rate of surcharge is 0%. So difference is 30750. So that will be our deduction from our tax, and then cess will be applicable. So you should read this example. You should try to solve it yourself. So you will have the practice what exactly and how exactly we need to calculate these calculations. This is optional rate of tax. There is an optional rate. A new rate of tax is also applicable. But this is module number 3 study material. So you do not need to read in this chapter. You have to skip it. There are solved examples. So please do practice these examples. If there is any issue, I'll solve it in the next session. I'm not going anywhere. Fine. I'll be there for you. If you have any issue, you can ask me in the next session. So these are examples of surcharge, marginal relief, etc. Everything has been given in this sheet. And there are chart also, which is also being made for unexplained income. Female position, there is for previous year and same year tax collection also given in that. These are the provision we have discussed. These are the provision of rate of taxes. I have already discussed with you in my notes. These are the study concept. I have just copied it. So there's nothing new you need to read from this topic. You just need to solve the question. All other things has been already been discussed. The special rate income you will be going to study in capital gain chapter. I have already red marked those provisions, those not in your syllabus in this chapter. You will discuss it in the next chapter in future. There are unexplained income tax rate. We have already discussed. It's 78%. It's again written over here. You need not to read it again. Just do not worry. I have all syllabus has been covered in the notes. Again, surcharge provision of study material already written over here. We have already discussed. There's only one concept. The surcharge rate is 10, 15, 25 and 37%. But when there is some special income included, like dividend income, like capital gain income, etc., then surcharge rate will be changed. I have prepared a very interesting diagram for surcharge rate. And that is, we will discuss in the next session in the starting of the class. Because today you have to cover a lot of things, you have to revise it. So when you will be strong enough to understand or to solve the question given in this notes, then we will be able to understand the surcharge special provision also. These, what I am scrolling right now, these are the special provision for surcharge from this table. You should not read it from this table. I have made a very simple diagram for it. You can read from that diagram. I'll explain you that diagram and with example also. So you should not read anything what I'm scrolling right now. You just need to solve the question given in this illustration question. You just need to solve these questions. That is your homework. You have to do it. Everything else will be taken care of by me. Just relax. These are all questions for marginal relief, etc. Solve it and you will find it out. It's very simple concept. There's nothing difficult in this. They're very simple. Again, marginally already given in study part also. So I've already explained you with my notes. You not need to read from over here. It's the same provisions. Nothing is different. Copy paste provision. The rebate provision we have discussed, 12,500 rupees rebate provision, already discussed with notes above. Again, written the same concept over here. You not need to read from here. These are the questions. Test your knowledge question. Please go through all the question. Please solve all the question with test your knowledge, etc. Everything. If there's any query, I will solve it for you. At least just read there with solution. If there's any query, I'll solve it to you. And the most important thing, revise twice. That's my advice to make you wise. Clear? So if there's any query, I'll answer it. Okay, let's see. Age is 6080. After this 2 or 3 minutes, I'll close down the lecture. What are always reading null in my name, Jarindra? There is something null is written in your name. Whenever you send me the query, the name is null Jarindra Kumar. So might be your ID is something from null. That's why I'm calling. So in future, I'll call you Jarindra Kumar. Okay. Okay. I've done this. It is Pooja's asking. It isn't unethical to take away the entire income, sir, as per the rule. I'm not getting what you are asking, Pooja. Please ask in detail. Okay. I have already uploaded the all notes in my previous class, in this class also. I just need to upload the MCQ sheet that will uploaded by me tomorrow. So you can see the answer, etc. So in next session, let me tell you what is going to be happen. In the next session, the starting session, I'll explain the surcharge provision with the diagram. And I'll take an MCQ test till now provision. There's the MCQ test for rate of taxes. That is a numerical topic. Please have a calculator and a paper and pen for our next class. That will be on 18th, same time, 6 o'clock in the evening. And till then, have a good night and take care of yourself. And please, lage raho, padhte raho, be sincere, be focused, and you will be a chartered accountant. Okay? Mr. Ram, we can close the class. Class has been completed.